Yeah, I think we're good. It's always that latency process, right? Wait for it to show up on YouTube. That way we know we're live. Okay, yeah, the audio is good. Hey, what's going on? What's going on? What's going on? What's going on, everybody? All right, got a few people popping up already. What's going on? We see the family in there. Brian Williams, what's up? Crypto Monster, what's going on? Peace, power, and profit to you. It's been a minute, right? Yeah, been on my little sabbatical, right? If there's such a thing, right? Been on a sabbatical, a little hiatus here. What's going on, family? What's going on? Firing up the stream yard. It's been a while. It was a little dusty. I had to go in there and tinker some things a little bit, get the some settings together here. Been a minute since I've been on StreamYard. I've been operating a lot through Zoom, of course, from some sessions and training sessions, but for the most part, we're still in the building. All right. So how you guys doing today on this Sunday? All right, on this Sunday. Hope you guys are great. Let's see, make sure we are live on the other platforms. Twitter, we're live on Facebook, Meta, right? The new Meta over there. We have to say it that way, but you know how it is. Zuckerberg is trying to do whatever he can to rebrand himself. All right, so we'll cut him a little slack. What's going on, family? What's going on, Ramirez 7 Heavens in the building, right? I always say Ramirez. I know it's Ramirez. Is it Ramirez or Ramirez? The 7 obviously being, a Z. I always get it confused, but nonetheless, forgive me if I butcher the name. I mean, no ill will. Peace up, and bless up to you as well. Peace, power, and profit to you guys, right? What's going on? So we'll jump into it. Of course, this is not a planned event. I jumped on for the value that I know there's a lot of things that need to be somewhat discussed in terms of what's going on with the market, right? I'm sure you guys been able to go through all the different channels that you can to make sense of all this. You've been privy to, now learn how to seek out places that gives you good information, good, wholesome organic data that relates back to the marketplace, news related, any aspect that has to come along with dealing with the markets as a whole. So you guys are not rookies in that perspective, right? We went on a tirade literally for 2.5 years, is seemingly really building up a cadre of different portals that you guys can reserve, revert back to if necessary, to kind of gather some functional data to help you with what's going on with the marketplace. Again, a lot of you guys are already sharp. Day one, you guys hit the ground running. You was able to kind of be really useful when using research methodology used to transfer that into the equity markets, right? Some of you guys come from other aspects of information field, being able to kind of stay on top of what's going on for us primary source information. And so coming to the financial space, it was night and day. It was easy, right? It wasn't like it was, like pulling teeth for you guys to understand the process of being able to, utilize that skill set. So again, you guys are already well equipped to be able to handle this stuff. So I'm excited to be here. I'm excited to sit with you guys. What's going on, Brother Mathis? Peace, power, and profit to you. I see you in the building as well. Ramirez the God. All right. I hope I'm saying Ramire, or is it Ramire or Ramirez? Sometimes people, spin that R-E, so maybe you could jump on the live at some point and, speak it into existence the proper way. If I'm butchering it, forgive me again. But shout out to you guys again. So again, Sunday, doing a little quick little conversation just concerning what's going on with the marketplace here. I'm sure you guys been watching the fireworks. It's been, man, nothing short of event after event for the past, really, to be honest, since the summer, right? Since the summertime. But since we did our live, I should say our last live, I think it was somewhere around the fall, before I caught the pandemic bug, whatever. Right, another conversation too. But everything that we kind of put in place up until then, we've already seen it coming to fruition at some point, right? We saw what happened with the crypto markets. We spoke about that, emphatically, what came about with that. We spoke about currencies in terms of some of the forex scenarios, in terms of dealing with the inflation. Uh, uh, I should say the degradation of currencies based upon what was happening with inflation, what that will look like in certain nations, right? We talked about the Japanification, right? This whole reality with that. We went through the banking sector. We did that video several times, and kind of delving into the ideal of what it looks like from the banking sector. What is the banking sector? What's fractional banking? And we went extensively into those conversations several times, right? We played that video several times. Uh, and who knew? Now that information is like, worth a pound of gold right now, because again, you realize in the system of the banking, structure as a whole, it has a lot of holes in it, right? There's a lot of problems dealing with the banking sector as a whole. Some of the things we spoke about again, going back for years, we've been speaking about the value where this is why we trust, not necessarily use the word trust. Let me replace that word. This is why we rather function in the brokerage side of things as opposed to just kind of parlaying in the banking side of things, right? I mean, again, really, outside of the money printing that came about in 2020, the banking sector as a whole, in terms of the money market accounts, were like dead, right? We were sitting at zero interest rates, basically, right? You're not making no money in the banks at that point, regardless. Even when they started to raise rates, it became apparent when the money markets, really kind of hit a peak value. Let's say maybe a couple months ago, maybe in the end of 2022, getting into that 4% range, 4.5. Of course, I bonds were paying up near 5, whatever. At some point, they had shot up because the 2-year was up pretty high. It's backed off since the banking crisis, but nonetheless, we were able to kind of sniff out that reality, right? We were saying, okay, well, hey, you're not going to really do well in that side of the market in terms of the bonds until they begin to raise rates, right? And so that kind of ends the party, though. Like, who wants to have higher interest rates when they trying to finance a car, home, get a credit card, or whatever the case, right? So a lot of those things, they're interconnected in a lot of ways, because we're seeing just how fragile the system is, right? The status quo, as we know it to be, turned out it was a house of cards, right? It's always been a house of cards, but it's hard to get people to see that until they become affected, right? So it's kind of like out of sight, out of mind. You're not thinking about this stuff if it's not affecting you, right? If you got your affairs in order, that's fine. Now you still may be suffering from inflation, because that's a blanket, hitting tax that hits everybody, even the wealthy. They can stomach it and weather it better. Of course, it don't really ding them as much as it would ding us. If it ding them at all, but nonetheless, they know it's there. They know it exists. And it hurts a lot of people who may be underneath them if they are business owners or whatnot, because they have to kind of contend with the value to what raise their pay, so they can have an equitable shot at being able to survive this, degradation of this hitting tax in terms of inflation, as we know it to be. That's basically what it is. And it's volatile. Why? Because food prices go up, gas prices go up, they come down. It's not stable. It's not like it's a set number and we sit there until it comes down. That's not how this stuff works. That's why it's the most, regressive tax of all time. People who are in the economy world are speaking to these kind of different dynamics. They'll tell you unequivocally, inflation is a regressive tax. It hits you and it continuously hits you, right? It digs into your purchasing power. It digs into your savings account. It digs into your ability to invest consistently. Of course, if you happen to kind of, move pieces around the chessboard to kind of keep some capital liquid, unless it's too big to invest in the stock, the stock markets, or, whatever asset that you may be trying to, invest in. What's going on, family? Ori, see you popped in the building. Peace, power, and profit to you guys, man. Happy to have y'all back in the house, man. It's been a minute. Again, I know you're like, your brother jumped on out of nowhere, huh? Yeah, I kind of been, going through, some different business practices in terms of things I got going on, household reality, things of that nature. So again, always close to the grind. Of course, y'all know I'm always, close by in terms of what I do. Because you see my posts a lot. I'm still, constantly still posting about markets everywhere I can. A lot of it just kind of, heads up stuff where I see what's going on. So a lot of stuff you're capable, more than capable to see and get yourself. I think at this point, since we went through, a timeline of just, turning over rocks, turning over leaves, get to the data, getting to the information. So you guys are well equipped to be able to handle this stuff. So again, happy to have you guys in the house. Crypto Monster in the building again. You see him in the house. Our brother Ramir, right? Ramir in the building, right? In the house again. You see him there, Brother Masters. We see you as well. Our family, Bryant Williams in the building, popping in as well. So I hope you guys doing well on this Sunday again. I know you guys are probably watching basketball. Isn't the Final Four popping off right now? I don't know if there's any games going on right now. The second probably is, if I'm not mistaken. Again, don't come from y'all know I don't. I gave up on that kind of lane a little bit years ago to kind of get focused about doing something serious. For far as my perspective. So shout out to everybody that's maybe participating in that. But I just, I'm on a different path right now, right? So I'll let that be what it is until we can, own some of that stuff. If we ain't the ownerships, if we don't have at least, a third, of not half of the ownership in those in sports franchise or environments, then no need for me to sit there and give them my view. It serves no purpose, right? Because it's not equitable across the across the spectrum of people who really participate in it the most. So I just kind of gave up in trying to play reindeer games in that regard. So anyway, so let's talk about it real quick. So I have a little time. I'll just speak about what's going on for the bank and say, let me get the link, like we always do. Let me post this link, guys. I know it's been a minute. I haven't talked to you guys, Imano in quite a while. So I'm going to post it here. If you guys want to come on to the live stream here, we appreciate it. We appreciate you guys coming through here today again, as well. There's that the StreamYard link there. Let me see if I can post it over here too as well. All right, okay, it just posted different over there. That's fine. All right, so I'm just trying to get the link out just in case a few people may want to jump on while we are speaking here. I'm not going to be on like incredibly long because I got some other stuff to take care of here, but let's go over here to Meta. Right, I always want to call it Facebook or Fakebook, because y'all know my personal feelings about Facebook, but Meta, right? Meta, the stock itself is actually doing pretty well, right? The stock has really rebounded quite well ever since they kind of got off the the metaverse platform campaign. Mark Zuckerberg realized that when the shareholders began to really dig a ditch in his backside about why he's continuously trying to fight this uphill battle with the metaverse, he's just too soon. Right? He was just too soon in that endeavor. And that's a part of investing. You have to be willing to pivot. You have to be willing to adjust and audible when necessary. So, if he's making a conscious effort to do so, the stock should be able to reflect that. And thus far it has. Right now, I'm not going to say it's an inflationary hedge. I'm just going to say it was oversold, highly oversold. People saw value in it for the comeback story. At some point when we get through the inflationary fight, advertisers may return. How many, we don't know, but nonetheless, Facebook does have that, that margin power in terms of that. When we feel like we can get back to a place where the economy is strong, advertisers go back to doing what they do in that regard, utilizing that, and Instagram, which he owns that as well. I think WhatsApp, he owns that as well. Then some of that will, some of that capital will return. What's going on, Oba Rich B? I see you. Peace, power, and profit to you, Oba. Good to see you again, man. Good to see you. My best to everyone. Best to you guys as families. Hope you guys have been healthy and well, and everything else that comes along with being great. Y'all know we definitely preach, health and wellness over here, so it's always great to speak to that. All right, but there's the link, guys. If you do want to come on the panel and chop it up a little bit, speak about what's going on for us, the banking sector as a whole. Any question that you may have concerning the markets, we can kind of speak to that a little bit here. Go over some different perspectives and scenarios that I see that you guys may also see yourselves, which would be great because you want to share that, within your community, right? How important is it to have a community where you can speak to people who have a like-minded interest, as we always like to say, have been saying for quite a while, and it really helps you, again, adjust a lot of your thoughts about the marketplace as a whole too. Just being able to politic and think tank through that stuff, right? So again, that's why we love to come on, when necessary, of course, in this regard, to speak to that a little bit, just to kind of make sure we reiterate exactly what we're trying to accomplish here. When I say we, meaning all of us who are in the retail trader space, right? Some of you guys have gone on to do other things on the entrepreneur side of things, right? You're translating, the value of market data to that of business ownership, right? That towards real estate ownership, whatever it may be, it's all symbiotic, right? And And so again, when you have things like what we're dealing with now with the banks, right? This idea of the bank, having somewhat of a chip in its armor, right? Which was there pretty much for quite a while, going back since, again, Dodd-Frank, going back 2008, 2009, right? We knew there was a lot of problems with the banking sector then, because again, you talk about people who are literally, middlemen in charge of some of the most important business decisions of your life when it comes to owning a home. Some people financing a car, right? We talking about, these, you know, say 10-year notes, 20, 30-year notes when it comes to house ownerships, things of that nature, right? You go into places or institutions that you think will be better equipped to be able to deal with such a process, right? Because first thing you will say to yourself, well, this company ain't going out of business, right? Or this bank is not going to go under. So, my contract should be safe, right? Or this, that, and the third. But again, turns out that there's a lot of things that's been going on. What's going on, family? Contrarian thinker, we see you in the building. Popped in again here. Peace, power, profit. Happy to have you in the house today as well. What we realized and found out that, again, a lot of things that were evident in the subprime lending, catastrophe that came about and crashing the housing market, a lot of those practices were still happening. They morphed into something different, right? Well, what I mean by that, well, when the Feds began to go on their campaign or this tirade of printing all this excessive money over the years between 2009, right, when they came in with that, that aspect of the bazooka under Ben Bernanke, right, Obama presidency at that time, again, it gave banks, even though they was highly scrutinized for the value of what came out of Dodd-Frank, but it really didn't fix the systemic problem that you have with these people who are, again, always thinking that they can, route the system in a way where they can obviously, how can I describe it? How can they, pretty much to beat the system? They're trying to beat the system, right? Banks' sole value of being able to make money comes off the back of fees and interest rates, right? That's the name of their game, right? They're utilizing your need to have a specialist, if you will, to help you again navigate the ability to be able to borrow, large, sums of money, take out, i.e., credit loans, this, that, and the third, that being house card, credit cards, whatever, right? Small business, whatever. And so since there's no really true other liaisons or agencies out there that take, the middleman out the equation, and you can go direct to market, which that's starting to change now. Of course, we're seeing that now, right? There are different portals now where you necessarily don't have to go through a major bank or a regional bank, right? The junior banks, or some of the down the line ones in terms of credit, credit unions have always been the most safe choice, right? Y'all got grandparents, right? Grandparents are gonna tell you, like unequivocally, their value is that we want to, we stick with the credit unions, right? Right? We're credit union orientated in a lot of ways, and that has always been their safety net, if you will, if they even going to deal with the banking sector, right? But again, we found out that a lot of these banks were just what they were overexposed in a lot of high risk assets, and they were kind of playing the playbook under, at some point things are going to get better, so we can sit on these toxic assets for a while, right? This toxic, portfolio, and it'll balance itself out on the back end, right? But turns out the higher the interest rates went up, the more it exposed the value that they had too much leverage into toxic assets. So that's what caused them to kind of go under, right? Or at least get them exposed. They got exposed based upon that. All right, let me see. I think you just popped in over, Chris. Make sure you're good to go there. Yeah, okay, it's showing up. Let me see. Okay, yeah. All right, so yeah, that's the whole reality of what we get dealing with for the banking sector, right? So a lot of people are asking questions. Is my bank gonna fold tomorrow? Are we crashing and burning from here on out? But I will say this, just from my perspective here again, given the totality of the situation, a lot of this was already kind of in the works for what it was, and it just showed you how a lot of mismanagement that has been going on through the banking sector for so long is now coming to a point where the average Joe gets the chance to see exactly the practice of what these banks been doing. When we used to have conversations about fractional banking, we used to have the conversations about how banks take your money and they literally invest with it. And most people are like, no, they don't do that. They don't do that. Well, anytime you deposit money, regardless if it's under the 250,000 threshold or not, that money still is, money that's on the books, right? That's money that is on the books, and they still have the validity to lend that money, by way of, loans, this, that, and the third, right? Well, a lot of people used to kind of look at the side was like, no, that's not how this stuff works. Like, yeah, it kind of does work that way. And you kind of sign up to that when you agree to that through a lot of these bank provisions. That's the whole, again, modus operandi, now them being able to also grow capital in a way where they can not only try to attempt to ensure their deposits, because a lot of people do a lot of unsecured depositing value. They just want to be in a position where they can always be liquid when they need to be, but not being insured also puts you at a lot of risk, right? We saw that with the Silicon Valley scenario, right? We can speak to that as well, right? So that's another conversation in itself. Why? Because now we're in a position where, guess what? Going forward, when you go to make such deposits, or you go to do something of that nature in terms of being able to access banks provision when it comes to loans or whatever, you want to make sure you kind of check that bank out, right? What's going on, fam? We see you in the building. Ramir in the building. Peace, power, and profit to you. Shout out to you. Finally got the name right. I always put the Ramirez 7 for some reason, because it just seemed to be, that's how it would kind of flow. But shout out to you, family. Good to have you in the building, man. Shout out to Oprah Chris in the building. We see him in the house as well. Right. So again, just speaking to a little bit of that today. Again, if you guys have any questions concerning this stuff, a lot of this stuff you guys are already equipped to be able to deal with it. It is not rocket science at this point to realize how the system is set up. And I think a lot of people got a crash course on the banking sector in terms of some of their practices, based upon having to deal with the fact that if there is going to be a run on their particular bank, what they need to do, if they're covered or whatever, and how they should go about, making the next move be their best move, right? If you want to go to a bigger, more secure bank, that of a Chase or JP Morgan or some of these bigger, higher name individuals, well, a lot of this stuff is also this is where it gets becomes a problem. Why? Because again, we know that the higher echelon banks like Chase and this, that, and the third, they're going to come with a lot more scrutiny in terms of being able to deal with again, a person who's only got a few $100, maybe a few thousand, they want to bank with them, but okay, yeah, they may not have the best to credit and this, that, and the third. And, because banks do that. That's what they do, right? They screen you to hold your money. In essence, only around take your money and then go out and do what with it? Invest with it and gamble with it. Right? So, where's the trade-off, right? They're not doing you a favor, right? I've been saying that for years. I've been preaching that. Like, they're not doing you a favor, right? You come out better, again, going the brokerage route, right? Where at least at some of these points, and even before the stablecoin scenario even blew up with the with the FTX scandal, right? A lot of those stable coins were paying out better interest, right? A lot of these, interest accruing, even crypto accounts were paying out better than even a money market account when we were sitting at zero interest rate. So what was the use of having a bank unless you're gonna make a large transaction, right? But all that stuff is obviously more correlated to the legalese that protects you anyway, because now you have a comptroller in terms of a brokerage, right? A real estate agent. They got lawyers, right? It's not like they're gonna just sell you bad paper at this point in the game and get away with it, right? Because that mortgage is easy transfer to another lending company. That's what they do. They auction off lending mortgages all the time, right? We just saw that happen recently with Wells Fargo. Wells Fargo was the biggest real estate, basically the biggest real estate equity holder literally in the United States. They really dumped their entire real estate portfolio to not have to deal with that headache in their mind, I guess, ever again, for the fact that they didn't want to have all that, bad paper on their books sitting and waiting to see if people going to default or whatever, knowing that it was kind of really, messing up their ability to capitalize in other aspects of the market, in terms when you see like a Goldman Sachs, right? They're more invested in the markets, right? They're not dealing with one block of a portfolio where they're just kind of banking it, this is going to sustain them, right? We're talking about low margins when it comes to that of really mortgages, right? Because it's not like people are doing it every day, but nonetheless, it is good paper because it's backed by what, the value of the treasury, right? However, Goldman Sachs says, okay, we're going to go into the markets with a lot of our money, and we're going to utilize, cycles, sectors and values in that to kind of boost our margin. Why? Because we kind of, became equipped to learn how to read, good opportunities that you can get, from investing in the stock market, so to speak, as or the forex or the commodity markets and gold, as opposed to sitting on paper in terms of real estate notes, whatever, right? These 30-year bonds or whatever. So again, you're starting to see that, right? That dynamic now where the banks are saying, okay, their back is against the wall. They got to regroup, re-equip themselves. Hey, what's going on, Sonny? See you in the building. Sonny Bacor in the house, right? Open Marquis in the building. All right. Marcus, I should say. Excuse me. Divine, we see you in the building as well. Shout out to you. Peace, power, and profit, guys. See y'all popping in the house as well. All right. Shout out to the fam again. You guys coming in the building. All right. Shout out to you all. So essentially, again, like we discussed, going back, way before, I should say, leaving the summer of 2020, when the idea of the bazooka money really became apparent that they was going to really, take this thing to the next level. That really gave us everything we needed to know in terms of being able to deal with this market today, right? They laid the foundation of what we was going to witness today, because we spoke about, okay, well, this is going to lead to inflation if they don't stop. Okay, if they don't, if it gets beyond that and they don't cull some of that back, it's going to lead to stagflation. And that came into fruition because we're literally in stagflation right now. And the recession conversation that we spoke about, literally, I think, once say the summer of 2021, where we were pretty much saying that we should be in a recession at least by Q1 or Q2 of 2020. No, we spoke about that in 22, excuse me. We said that we should be in a recession by Q1 or Q2 of 2023. Well, guess what? We're here now. They've all but pretty much told us that we're in a recession, but they got to fake it till they make it, right? They got to tell you that everything is okay when inevitably we know that it's not, right? Because that's how politics work. They're never going to admit or alarm the American people that we are in trouble, all right? So Janet Yellen been telling you guys what? The economy is strong. Well, did the economy look strong to you guys, right? When they will tell you that, inflation was transitory back in, spring, summer 2021, they kept telling y'all it's transitory. Was inflation transitory? Clearly it was not, right? So every time you know that they're beating the bullhorn about something that's not a problem, chances are it's a problem. You have to pretty much do the opposite. It's hard to think that way when you think about government, because some people pull out of faith and trust in government, right? But we know that's the worst thing you can do. Why? Because the government never showed you that they're responsible from a fiduciary responsibility value, and also a health and wellness perspective, that they're going to go to bat for you, right? They're going to have your back, right? They've never proven that in a consistent level where you can say, well, this is solid, right? So you was about to jump in there, brother, Ramir?
Yeah, peace, Oba. Can you hear me? Can everybody hear me?
Hear you. Yeah.
All right, cool. Good. I just want to say peace, Oba. You know what I mean? It's a pleasure, to be on for the second time ever. And I appreciate all the time that you've given to us, and for me to just sit back and just be a fly on the wall and just listen. You helped me out a lot. And I appreciate that. Second, I want to say peace to all the sons and daughters of Shango and Yemaya, and all the Oba.
Profit of that. Oh yeah.
Right. So exactly, no going, cut them down. So, long story short, like I told you the first time we met, maybe a year or so ago, I've been trading since 2017. I came up with Bitcoin. I kind of got lucky, I felt like, but it pulled me into a different, like the whole world.
Time. I'm not gonna say lucky, you just on time.
Yeah, I was right on time, and I was watching it for years. One of my boys that would kind of just be living in the basement, he told me like the day that it came out, honestly, and he was like, "Yo, you stupid." And I was like, "What do you know about money? You live in your mom's basement." You know what I'm saying? And he knew I should be a billionaire right now. You know what I mean?
Hindsight is 2020 in terms
2020.
You just don't know, right? So
exactly. Long story short, the home that I'm sitting in right now, multifamily in Newark, New Jersey. I bought this the year after in 2018. And my home has doubled in value, so I put it down and it's come up, so now I'm sitting here. I got a better job and everything. I was driving school buses for a while for the Board of Education. Now I drive trucks, CDL type stuff. So I'm making like double the money. So basically, everything that you're talking about, it rolls into now I'm looking at rates and everything like that, and like I'm pretty much kind of afraid of what's going on with the economy and everything, because I watch Powell and everything every time he speaks. I'm watching everything with the banks and everything. So I'm like, man, maybe I should take out some of my equity in a way, like before this whole thing crashed. And I ain't got nothing to you know what I mean, to make a huge move with or investment when the time is right. So I know nobody can tell anybody exactly what to do, and I'm not looking for you to tell me exactly what to do, but I'm looking for your expertise, or maybe give me your opinion on would I be foolish, because I'm also getting the grant right now. Y'all got to get that government money, man. You know what I
Oh,
mean?
definitely.
They owe us.
Sister Monica is
You know, I'm
oh,
getting I'm getting 20 racks. They gonna fix up and do some facade things on my home and everything. So y'all just gotta look and go into y'all government, county and everything, websites and everything, and get that reparations, y'all, because they owe us, and they gonna give it to us as long as we upstanding and straight. So that's what I wanted to say, and I wanted to just ask you about pulling out some of that equity before the chips fall. And I think I'm gonna have the opportunity to do that by the mid to end of the summer.
right.
Now
Well,
I mute
again,
myself.
no, you good. No, number one, appreciate the question, number one, and shout out to you, Peacebound Property, all the moves you've been making. Again, another exemplary story why a lot of us, again, who come from a lot of different spaces outside of just the typical the realm of speaking to the country side of things, but we realize the power of financial literacy now in terms of being able to make these moves and not have to feel like we're left out or we're lost in the clouds and not knowing what to do because we don't know who to trust, where to go, how to get good information, right? So again, a lot of us is just took the information we got from good research skills and being able to kind of follow the domino chips as they fall on that side of the board. We just parlayed it into the financial side of things, right? And that's great now because again, you're starting to see it from a place where you say, well, okay, hey, I don't have to fight, fight for my future in a way where if I feel like, if I'm shut out from an opportunity, there's more ways I can get to the bag, right? Again, through these investment portals, right? As we call them, financial vehicles, right? But that leads into another door opening, because now you become more sanguine and you become more intelligent in terms of learning how to now navigate the real estate market, at least from a base case where you can, politic, know where to go if you want to, buy a home. If you're seeking grants, again, what that looks like when you go to your state representatives or your state, officials and trying to look, what's there, right? What do they have allocated for as budgets to help small businesses, minorities, whatever it may be, right? We know there's a lot of programs out there like that. Me and Monica, of course, we used to go heavy into these things, and of course, that's her niche, that is her expertise. But all intents and purposes, it was a great why, because it gives people a portal where they can go look, right? We just seem straight to these sites, right? We're not going to tell you if you make the decision, not just told up to you, but it really helps when you have a liaison, is my point. So you guys been utilizing that stuff apparently. So we love to see that stuff because that shows you that, brothers, we're in a place where we can make some moves, right? We can do some things and not feel like, it's like pulling teeth to get information, right? Or someone trying to sell you a lot of courses to get to a simple process, right? We saw a lot of that happen during COVID. We saw that happening before COVID, right? People are always trying to, take you to wits end just to give you some information you could have pulled and looked up yourself, right? So our whole goal is to eliminate middlemen, right? That's what everybody's goal should be. If they really care about, you being successful or anybody else, that's how, our daily activity should resort around, hey, let's find out where we can come overcome the situation, help this situation out for anybody, right, that's looking for it, right? So shout out to you. So when it comes to the market in terms of you saying as far as equities, right, we spoke about that a little bit. So real quick, I'll do this since we're already on the topic here. Let's jump over and share some screens, right? Let's look at the market real quick here. Just the importance of being able to, let's go over to the spiders here. All right, let's look at this stuff here from a base case, right? Because we know the S&P 500 pretty much is it is the the gateway or the portal to what's going on with the marketplace as a whole, right? So nothing new here. As a matter of fact, let's use the monthly chart, right? Let's just make it make it more. Even though I got a lot of drawing up here, so y'all got to forgive me. All right, I'm always working here. All right, but let's just say, just given the cycle, right? We talked about this stuff a lot, but let's go back to our most recent pullback, right? Our most recent reset in the marketplace in terms of the COVID, right? The COVID debacle, right? Now we get to actually call it, what it is, right? Turned out, yeah, we were right. But I'll leave that alone. Another comes for another day. All right, but a lot of people were talking trash and coming at us saying, what y'all talking about with the COVID stuff? Y'all don't know what y'all talking about. Y'all pseudo. And turns out, okay, y'all might have been right. Right? Shots fired, right?
Yeah, funny.
Right? Shots
Yeah.
fired, right? I leave that alone, but nonetheless, in terms of the market, right? We just utilize it from the place of being able to take the skills we got from market practices, right? Market, day-to-day, regimens that we use, and we just translate that and being able to research, right? That's all we did. We went out and researched and we uncovered this. We found out this tea leaf led to the next one. This science is in this establishment. And we uncovered it and we said, hey guys, this ain't what it is. They tell y'all this, but it's not. And so we left it at that. We didn't say if you should not get the jab, whatever, but we did our part. But we looked at it from an investment cycle. So we looked at the companies like Moderna. We looked at, all the other companies in Novavax and Pfizer and AstraZeneca and BioNTech and Johnson & Johnson. I mean, we went down the whole gauntlet, Sorrento. I mean, y'all know the names at this point. They're like, name brand names because we went through them, right? But nonetheless, it turned out to be what it was. So again, just going back to the equity markets here, let me try the weekly here. Again, I got all this stuff up here. It may look a little bit better here. But in terms of the equity market, right? So we had our run on pretty much in the equity markets, right? We had our straight line melt up in the markets, right? This inorganic straight line here that you're seeing. So pretty much if I put a line on this here, so you can kind of get just a glance of just how proficient the market was off the back of this pump here, right? So we'll say that gap there all the way up here, basically towards the all-time high, right? We'll put it kind of somewhat in that, symmetrical value where you can kind of see it from a radius perspective, right? If just the sheer nature of how it clung to this perspective of a straight line higher than ever 45-degree angle, and it was just consistent money pumping, right? So if you look down here on the weekly chart, this squeeze momentum I have here, these green impressions, that show you the strength of capital coming in consistently at a point where the market didn't necessarily have any kind of hiccups in terms of a constant steady flow of capital coming in, keeping the markets elevated and propped up. You see shades up when it kind of turned dark olive gray to lime green, but you didn't see any red patches nowhere. Literally from June of 2020, right, when you spoke heavy about a lot was going on in the market at that point, all the way till we hit literally January of 2022, right? Like make that make sense, right? That's you're talking about a whole year and a half of just constantly money printing, right? So we literally took, as we will look at this in terms of on a compound annuity growth calculator rate perspective of markets giving you sometimes 7 to 13% on a yearly annual basis. That's how you look for returns in the market. Granted, before we had a COVID scenario or all the other things that kind of crippled us, you would say, okay, I feel safer getting 7 to 13+% in the S&P on the index fund as opposed to trying to put in the money market account collecting nothing literally, right? Or dealing with the bond market, trying to get 2% or whatever, right? If your capital ain't big enough, then 2% ain't gonna necessarily be a big swell there, right? So you look for other avenues to make money. So what we saw, people's portfolio literally went through the roof. Thrift saving plans, 401ks, Roth, all the things just went through the roof in that year and a half time span, right? And as weird as it is, for what it's worth, even though we pull back off the all-time high here from around like 470 and change, and we came down and tested that 348 level. Since then, we just been in this kind of this lull of a flag, right? Now, overall on a weekly chart, the market looks like it's in a bull flag, right? Again, I know I have all my little drawings up here. Of course, I have to kind of spread it out here, but you can see, you can clearly see what's going on here. It just seems like we're in a big, long channel, a stale channel, a bull flag in a way where we're not necessarily dropping, we're not necessarily breaking out. We just stuck. We stuck in, again, no man's land, right? So as you asked that question, brother Ramir, do I kind of pull some of my equity here? Well, that depends, right? Of course, it's not financial advice, but it depends, right? On number one, what's your duration story, right? What is your timeline? Are you in it for the value to kind of, it hit a certain value, or having some kind of form of a goal in mind that you want to take some chips off the table? Then I would say for what it's worth, you should definitely do that, right? You should trim when necessary, but only when necessary, right? So of course, pie in the sky, hindsight 2020, it'd have been great if you sold at the top, like the Feds did, right? When the Feds was doing all that insider trading, they were selling at the top. They literally sold at the top. Couldn't make this stuff up, right? And they got out scot-free. No one went to prison. No one got reprimanded, but you and I can't do that, right? They sent Martha Stewart to prison. Stop playing, right? They eat the Bernie Madoff, right? So we didn't get that luxury, right? We saw Nancy Pelosi insider trading like crazy. And now she gets to retire literally, right into the sunset, untouched, right? So the system is set up again to kind of protect this on. We get that. But when you think about this, all right, you rode this wave, not knowing when you got in or where you was exposed at, if you was having the tech. I don't know if you was having, certain sectors, of course, in this regard. I'm sure you had some tech somewhere in your portfolio, possibly. The first thing you ask yourself again when you look at this from a place of, you ask yourself, number one, why are you doing it, right? You in it for the growth story, but you also in it for the profit too. Growth is based upon you being able to kind of say, I'm going to still use the dollar cost averaging mechanism to kind of really roll good capital into what, opportunistic, assets at some point, right? These stocks that still show me a 5 to 10 year growth window, if not longer, right? Because now that money becomes a revolving door, right? That's money that you don't have to worry about. It's like set it and forget it, right? It better be in a working environment to accrue you 6%, 7%, 10, 15%, as opposed to kind of fighting, the banks, right? At this point, right? Collecting nothing essentially, right? You there, you brother? Oh, I don't know if you're trying to talk. Okay, my bad. I just saw you moving. I didn't know if you were trying to say something.
Yeah, I'm here, man. I'm sorry. My woman is the queen is at the front door.
You good? You good? Handle business. Handle business.
I'm listening though.
No, you good. So in that regard, again, you're looking at the market here, and you're trying to validate again. At this point, if you didn't get a chance to sell anywhere around this 460, I'm just saying if you were overweight a certain sector, if you was overweight a certain stock, because all the stocks that that were flying during that time, they are going to look alike, right? They look essentially just like what you see here with the SP 500, right? You look at Tesla, it's the same thing, right? It's the same thing, right? Tesla went up here, got up above 400. Of course, this is post the split, right? Post the Ford split that they did, and it's the same reality. Now, it had a deeper pullback than the SP 500, and that just happened recently because of what was happening with Elon. This whole issue with the Twitter saga, right? This whole issue that he was dealing with all these kind of fighting politicians, and him and Joe Biden was warring, and so the Democrats came after him and stuff a little bit. They was able to kind of push the stock down. They got the stock all the way down to almost $100 a share, right? And again, for what it's worth, we're talking about, again, a company that still has a lot of growth, baked into it, but it's still, I should say it's still rated up against a lot of its competitors at the point where if they get a chance to catch up when Tesla was kind of faltering, that kind of still balances out some of that equity, right? But we still know that, best in breed still has a place in this marketplace, right? We spoke about best in breed stocks, best in breed, pedigrees. What does that look like when you invest into the market, especially as a first-time investor, right? I'm always going to tell people, go to best in breed when you first start. No, unless you have an extensive due diligence, outlook about a certain company or stock or sector, where you find that there's still what they call a six man sitting on the bench that's waiting to come out, and it's easy to kind of get behind that particular company and small fractions until it can prove itself, right? But ordinarily, if you come in and don't have a whole lot of extensive research about the marketplace as a whole, first thing you should always do is look for best in breed. Why? Because you're talking about the one thing that everybody cares about: balance sheets, right? What does their balance sheet looks like? Do they have money on the books? What does their equity, look like? What does their debt to equity ratio looks like, right? Are they, head over heels in debt, or do they have a comparable equity value that they can, put up against their stock value or their EPS value to show that they have strength, right? There's growth still left in them, so to speak. And so that's why you run the companies like a Tesla, right? And people ran to companies like, as they thought to be like an Amazon, right? Google, right? The top brand names that y'all know, but this is on the tech sector, right? But there's so many others out there who flew underneath the radar that did heck of a lot better than these companies, right? But they're not name brand names, right? That takes a special type of investor who's going to really put in that work and go find those hidden gems, right? But for the most part, if we stuck with the name brands that we know, again, we still are comfortable saying that these companies still did pretty well given their situation, right? given the fact that, we know that they're still in a position where they can, acquire more market share when things do bounce out, and people kind of go through this whole, this rebranding of the stock market. That's basically what's happening now, right? You're starting to figure out that a lot of these old players, they're getting flipped upside down now, right? This kind of 14-year bull run has been kind of flipped upside on his head, and been exposed for what it really was. It was just a lot of Federal Reserve, money printing, that throwing it around, like it was, like you at the club somewhere. And now companies are going to figure out, okay, well, cheap money is going to dry up. Now I have to actually go out there and make money organically. I'm gonna have to go out there and do old school M&A, mergers and acquisitions, R&D, research and development, CapEx spending, right? I'm gonna have to really improve my business model to be able to weather the next 5 to 7 to 10 years. Why? Because there's no way we're going back to, basically, in my opinion, near zero interest rates and no time soon. That ship is sailed, right? That ship is sailed. So everything you look for now in the marketplace, what's going on, family? GA Price, I see in the house. Shout out to you. Peace, power, profit. Good to have you in the building, right? Everything that happens going forward at this point, you're going to have to become better at being a good stock picker, right? We spoke about that in 2021. We spoke about that in 2022, right? This is the time to sharpen your stock picking skills. We got good research methodologies when it comes to at least finding certain comparable companies, comparable sectors that we make and invest our money in, and kind of sit on it and say, okay, if I had a whole year to allow this $1,000 to work, this $5,000 to work, this $10,000 to work, where would I feel comfortable putting it, right? If I could just eke out a 3%, 4%, that's money well made in terms of interest accrued. Why? Because, again, money market accounts wasn't giving you that opportunity, right? And we know just leaving it in the bank account alone, that would be dumb, because that's dead money. Anytime money that's sitting don't have a purpose or interest accruing wheels attached to it, that's dead money, right? It's literally dead president as we know it to be, right? So ain't no more bragging about I got this money. Now, some would say it's safer to do that now because they're afraid of the banks, but that still ain't safe. Why? Because you're talking about I bonds are still paying out near 4-something%, right? And these are short dated bonds that give you, 3 to 6 months. You can pull, 4% on that kind of money. That's good money, right? That's a quarter worth of waiting, right? That's like a dividend payout, so to speak, right?
6.9% on them out bonds.
Yeah, some of them are up. It depends on which ones, right? Because there's a cadre of different ones in terms of the duration that you go for. You can do very well in the bond market. So, and that brings up a good point. I'm happy you mentioned that again, over Chris. When we spoke about the TINA trade, I don't know if y'all remember that. We spoke about this whole idea of the TINA trade, the acronym, right? TINA, there is no other alternative. Well, that was the excuse for people to buy up tech stock during what? 2020, 2021, until that ship sailed, right? Because ain't no other alternative. Stock market was kind of what, providing the grease that you needed to kind of go where you need to go. Real estate market kind of hit its peak. We saw that at some point people are going to say, well, you know what? I might need to back off now because this ain't going to last for long, right? We got interest rates down for a lot of people on the prime near 2.5, near, low 3s. That was phenomenal, right? We refied all our properties, right? It was just a thing where you had to be on cycle. You had to have been on cycle. And that comes with understanding how the market works. You guys are starting to do that now. You realize, okay, it's time to hold it now. Now it's time to kind of put money to work. The more you learn and realize how to utilize these cycles in the market, the better you become in investing in projects when it comes to, if you want to go out and buy a truck, brother Ramir, you'll know when that market is set up for that. Right now, it ain't a good market for it. Why? Because auto prices are still what? Elevated. Why? Because interest rates are up, right? Now, if you have no choice, you had to kind of make that power move because you needed it for the average, the aspect of business because it's picking up, then obviously you got to bite that bullet, right? You just got to be savvy, knowing how to go out there and find a good lender, or if you're going to pay cash and find that good rate, right? But ordinarily, you say, I'm going to let the rates come down a little bit, and I'm going to make me a power move during, this time, right? That gives me a better bang for my buck. My money stretches longer. I'm good to go, right? And at that point, you say the market should be picking up anyway, because if everybody getting choked right now because of what we're dealing with, falls inflation and all these recessionary pressures hitting everybody, the chances are, it's spread out across the board, right? No one really has safe cover, right? There's a few sectors that are still showing resiliency, right? But again, we're talking about fractional in terms of what we experienced in 2020, 2021, and even parts of 2019 when, the Fed's actually reversed and started cutting rates when they were trying to raise rates, right? Trump blew up Jerome Powell's spot. Hey, cut them rates, bro. What you doing, right? Japan is sitting on zero. Europe is sitting on zero. All the
He
other
called
nations
him a
didn't.
bonehead.
Yeah, he went in on it. Remember, he went in on Powell. People fail to realize, right? We used to show all them tapes. Like, man, he was going in on Powell almost every other day, right? And he forced him to really to cut rates at a time when he should not have. Now, again, it's debatable, but nonetheless, we were riding that wave for so long. We need to kind of pull some of that, that balance sheet back, right? So we can have dry powder to fight. Now we realize the importance of that now because the Feds are in a quagmire. They're in the catch-22. Dang if they do, dang if they don't. They can't afford the lower rates, and they can't afford to not do anything to try to somewhat backstop these banks. But I say let them fail. Let them fail. Why? Because this was their own doing. There are other platforms and institutions where you can still move money around and still be protected and safe. And for the most part, it wasn't like a lot of people on the American, perspective where you can say, well, how many Americans, average American citizens who are not invested in the stock market actually has $250,000 in liquid dry cash sitting in the bank? Let that marinate for a moment. I mean, being realistic, they know this stuff because they track the stuff through the banking data, right? They understand this through the banking and finance system where that money is sitting at. It's sitting in small pockets of hegemony of people who are what? Business owners, startups, VCs. Those are people really got that kind of liquid capital. We're talking about liquid capital. When you go to the bank, I'm gonna just withdraw 250K, right? Most of the people on the American side of things, our money is wrapped up in what? In the equities, right? Home ownerships, things that nature, right? It's wrapped up in long-term paper, right? Those bonds that we talked about. So we know that if there's an issue where the banks are being, stress tested, for at least in this case, it's now based upon the value that they had a lot of dirty paper on their books, right? When we say dirty paper, that means they had a lot of what? Short-term bonds that they were gambling on, or long-term bonds that they was gambling on in hopes that the interest rate will stay next to zero for a long time. What caught them off guard was as soon as Jerome Powell began to come out and signal to them that, hey, we're going to raise rates, guys. I'm warning y'all in advance. I go back to that famous Jackson Hole speech he gave back in 2019. People, if y'all know what I'm talking about, that 2019 speech was everything because that was the first time that the Federal Reserve, at least in my years on this planet, in this country, signaled that they were going to go against the grain, right, in terms of this whole latest experiment in terms of quantitative easing that came on the back of, it really got kickstarted under, we know Greenspan, but it really went to the next level under Bernanke, right? And then Yellen took the next leg, then Powell now took the next leg. That they was going to stop printing all this money, which obviously benefited more of the wealthy class than it did the American people, right? They came out pretty much and said, hey, we can't do this any longer like that. And Wall Street had enough time to adjust. A lot of these banks chose not to. They said at some point the Fed's going to be forced to relinquish this fight, and they're going to go back to QE. Why? Because they got so comfortable at cheap rates for so long, borrowing all this cheap money, basically next to nothing, having no kind of really fees in terms of the interest to pay back on that money sitting at zero interest rate. They can now take deposited money, our money, if it's a few thousand here, for a couple $100,000 here, or 10,000 here, and then turn around and invest it into long-term bonds. They were just playing the slow and steady game, thinking that it was going to be protected. Turned out they had no clothes on. They were naked underwater, right? As they say, emperor has no clothes. They got exposed. Why? Because as soon as we began to raise rates, and the fact that the rate that we raised rates so fast, it didn't get enough time to adjust, right? So that paper began to go worthless, right? As they raised rates, they value of those bonds began to sink. So that means now that if someone like yourself say, Ramir, you say, well, you know what? I'm feeling like I need to go do something with my paper and put it somewhere else, right? I'm not, I don't feel comfortable, just leaving it in the bank at this point. Let me go and pull my money and go make a power move, right? Let me go open up a business, this, that, and the third. You go to start making those kind of deposits. Now you realize, like, the bank, like, you sure you want to do that, Mr. Ramir? Right? They're trying to cook, keep you from they realize at that point they need that money on hand to backstop a lot of the other business practices. Now, in terms of paying out these shorter term, depositors or small people, because they don't really make up the bulk of the big stuff because they depend on the big boys, the VCs, in this case, SVIB. They depend on those guys to really give them that cushion that they got money on hand that they can now invest with. And so it blew up in their face, right? So for us, again, I said very, very, very simple. Looking at the stock market and saying, okay, well, how do I utilize the stock market you know, or as you asked the question, you know, do I move from how do I move my equity around? Where should I move my equity around? You know, in terms of how you may posit that question, you say this stuff again. If you've already rolled this ship up at this point in the game, going back to we'll go to SPX, right? I don't have stuff written on the SPX. This pretty much is the SPY on steroids. It's the original product, right? It's the full product value. If you look at this and say to yourself, okay, technically, I mean, we're not that much off from the all-time high, given the fact that we've gone through the Russia scenario, the inflation scenario, which is still ongoing, the conversation dealing with the I should say the recessionary conversation, because that really puts a stain on consumers' mindset when they know that we're in a recession. Ordinarily, they pull back on spending. Why? Because it becomes a thing where I don't know how long this is going to last, because now you have to reprice and rebrand a lot of the different industries that are out there based upon that recession, right? Because again, the taxation of interest rates now having to kind of go up and kind of balance out a lot of the demand euphoria that we're dealing with or had dealt with. That puts a strain on how you spend your money, right? It's what they call it's symbiotic, right? But there's still pockets of markets that do well in those environments. Why? Because these are things that you spend on everyday purchases that they're going to be that you got to have, right? One of them is what? Staples, right? We look at the consumer staple scenario, right? So we did this model a while back, right? This see one of my old charts. I drew on this thing a while back, and guess what? It's playing out inside this inverted head and shoulders and looking pretty good. This is the COVID lows, $44. Went up, hit a high around 78. And now we kind of trending right around 72. We're not that far off the all-time high. Literally the all-time high in consumer staple. This is what they call a low beta play. Low beta means it's less volatile. That gives you, and it's inside the index fund because it's XLP, so it's a subset of the spiders, right? That gives you at least a little piece knowing that, okay, this right here will survive a recession. Why? Because what's inside consumer staples, right? Y'all know what's inside consumer staples, right? Staple items. What a staple item? Toothpaste, right? Food, deodorant, right? Soap, the things people gonna buy that stuff come heck of high water, right? You're gonna buy the things that you need, that you have to survive off of, right? You may not go get that 6 to 8 inch, flat screen TV with the woofers in it and everything else, but you're gonna go get some toothpaste. You're gonna get some soap to wash it behind. You're gonna put some food in that refrigerator to take care of those babies, right? So these are things you look at and say, okay, well, if I had to do a flight to safety, if we are going into a recession, guess what? These stocks will be backstopped by the value that they offer something that is always going to be in need. It is a proper use case. Does that make sense? It's a proper use case. You got to have that, right? And that's how you look at the markets in terms of cycles. When the growth story ends, guess what? Another one wakes up. Now, ordinarily, these stocks ain't never been asleep anyway. They just was not high flyers to give you that big return that you got from an Apple or a Tesla. They became more what they call safety net plays. Right, y'all follow me there? They safety net plays because they're always going to be in play. It'll be a scenario where you say, well, if I want to put some money into an index fund, of course, it's not investment advice. I'm gonna put some money away for my kids, right? First thing you definitely want to look for is a few bonds, of course, because that's again long-term paper, right? In terms of when things balance out, but you'll be more savvy to know when to buy that paper now. Why? Because you realize the power of how interest rates work, right? When we kind of have excess liquidity and they have to draw that money down a little bit, that obviously causes a tightening process in equity markets or equity assets, if you will. Now that if we're getting ready to hit what they call peak interest rates, which we're kind of close there, again, we forecasted stuff 2 hours blue in the face, all of 2020 into 2021 and into 2022. I went emphatically deep into why you want to look at the cycles. I said by 2023, Q1, Q2, we should hit that point where we should be obviously in the recession. And at that point, you should see that pendulum swing back over to some of the more low beta plays, right? Stocks that are comparable to deal with a recession, if you will, right? So you can protect your paper. You ride the wave of the tech, get your bag. I did. A lot of us sold at the top. I sold Tesla, to be honest, about 12%, somebody off its all-time high. If probably a little bit more under that. I got the receipts to prove it. Y'all were doing it with Moderna. Y'all was selling a lot of stock. Chris, y'all know y'all was having the Moderna. Sister Monica, some of you guys will ride some of them same assets, and y'all wrote them well until they break out euphoric rate level, and you start selling some of that money off the top. We start taking profits off the top.
I just had at an old post I was looking at yesterday about a couple stocks we was talking about that did 100% or more from the COVID lows. So hey, you didn't get in on, you missed a lot of money. So
A lot of them went beyond that 200%, 300%. And it was just the euphoric value, what we know in terms of cheap money, right? Think about that. If you was in charge of being in a position where, you can use taxpayers' money to really, in terms of what the feds were trying to do, because we know what they were trying to do, but we know what their mission was. Their mission was to do what we know the system is set up to do: protect those who are on the 1%ers, right? It's always protect the 1% before it think about Joe Smo, the little guy at the plumbers, business down the street, right? It's set up that way because who donates to the government the most? The wealthy do, right? And it's a cheap system in a way where we know it really is inequitable for the value that they don't put a lot of stock into really helping Main Street. Why? Because if they do all those things that we know Main Street wants, then that really takes the use of government out the equation, right? Your purpose is to do the will of the people. That's what it's supposed to be designed. But they've changed that now. They got you more dependent upon, their every beck and call, their every move, or their every thing that they do, that it provides you no kind of benefit as a taxpayer to sit and really partake in government type of, industries, unless you're going after the grants, because that's the free money bag, and not really benefit, right? You're getting no benefit from government. They're just more so in the way than they are really giving you a better leg up. Make sense? Right? Because it comes with a lot of red tape when it comes to helping you. It's like pulling teeth. Case in point, student loans, right? Y'all know we're big on student loans, helping them get their student loans reversed and, taking out the books legally, right? The right way. And we did a broadcast how to look for this stuff. We was doing the Borrower Defense Act. We went after those schools that were, predatory lending. We was able to come reverse people's student loan. I got mine reversed on that with my school. And we said, hey, given the situation, if government ever want to do a big reset, given the national debt that we got for our student loan, they can wipe that out overnight. At that point, they'll bail out everybody anyway, right? Why not take out the biggest burden on the back of American people, which is student loan debt for the most part? That in itself opens up a whole new line of equity credit that flows into the marketplace, right? Be it stocks, be it real estate, be it the economy as a whole. That's a burden that will be great. But instead, they do like they always do. It's the trick bag, right? Well, we're gonna put it in other programs. We're gonna try to do it this way. It's that, let's spread it across everybody, but it'll be in very let's just say hidden policies and local jurisdiction. It won't be like a federal blanket kind of bailout, right? Like they do the banks, like they did with corporate America. They bail them out by name brand. Or we're going to bail out Intel. Why? Because they've been around for a long time. Of course, we know they do good business, but if we're going to do the CHIPS Act and bring semiconductors back to America's shoreline, because we don't know what's going to happen with Taiwan if China invades them, which is the biggest purveyor of semiconductors on the planet. Guess what? We feel more comfortable putting it into the hands of a company that we trust and we know. Okay, why not AMD? Why not NVIDIA, right? Why you chose Intel? Why? Because we know that they have a direct connection with the CEO. I forgot the guy's name. It's come to me in a minute. But anyway, they knew this guy person, right? So this is what they call nepotism, right? Government is providing a really micro lens in terms of nepotism, in terms of how they look at even the corporate America structure, right? So people can't convince you that there's no favoritism in America. Clearly it is, right? It's supposed to be the land of the free market capitalism, right? Everybody have a chance to make it, but we know that's not the case. They're picking and choosing winners and losers. The same reason why Joe Biden overlooked Elon Musk when it came to the Clean Energy Initiative, right? The Clean Energy Acts and all the different things that came under the infrastructure bill. He overlooked Elon Musk, the biggest, player in that space. Like, how you take that guy out the picture, throw him under the bus because you don't like his politics or his verbose, perspectives about economies and politics, and say, well, we're gonna big up Ford, we're gonna big up GM. You see how that work? And these are the companies that they was supposed to let die out during Obama era, right? Remember the GM was about to go under. Y'all remember way back when GM was going to go under, and they stepped in and saved a portion of it, right? Because they had bad business practices then. They were doing a lot of what we know what's happening with SIVB and all the other ones today. They were, not really doing well by the statutory what they put in place as a business model to protect their what? The industry, number one, but number two, the people, right? Because these are our industry standards, or what we call our industry, marquee company, car companies, right? Outside of that, when you got to go overseas, right? That's why people are going, Japan and getting them Hondas and them Acura. I know I love me some Acura, right? I'm from Florida, right? We love Acuras, right? Right? We're gonna act up in the Acura, right? Especially New Jersey, New York. Y'all know they love them Acuras up during that time when it was popping, right? Lexus and all that, right? People like, man, I ain't gonna deal with the American car. I'm out finna drive around the Ford, man, with some 23s on it. Now I'm straight, right? You ain't doing it. But nonetheless, you guys get it. It's the understanding where you gotta allow the markets to correct itself. But that's what they're not doing now. They literally told everybody that they're going to pick the winners and losers. Them bailing out SIVB, Silicon Valley Bank, was nepotism. Front and center. Y'all saw it firsthand, front and center. At the same time, the Supreme Court taking on the case of student loan forgiveness. Because literally 2 people, the Republicans found 2 crash dummies to challenge Joe Biden's student loan forgiveness plan, right? Right, these 2 cases, there's 2 cases that are together, that merged together to go before the Supreme Court to test the validity of the student loan forgiveness, right, under the Department of Education. It's forgot the act itself, but it's under some provision. But nonetheless, they hold up that whole process that will help millions of people get from underneath that debt, which will turn around actually, as they say it. Well, here's the Republican argument: it's going to hurt the economy, because now who's going to pay for that? Well, the same people who've been paying to give Ukraine tens of billions of dollars, hundreds of billions of dollars, right? The same people who throwing around money bailing out who? These banks all of a sudden that were actually doing predatory gambling, right? Before it was predatory lending on the subprime lending crash. Now in 2023, it's predatory gambling in bonds and high risk assets. When they had every opportunity to lessen the exposure, hedge against that risk when the Fed began to raise rate, they chose not to. They kept their foot on the pedal saying, no, we straight. Because they rely on their depositors bailing them out. It was a scam and a sham of epic proportion. And now all of a sudden, the first thing they tell you, guys, no, don't panic. The banks are safe. Your money is good. Now, ordinarily, if that not happened, and say for instance, you was a month later, or excuse me, a month early, and you did a run on the bank because you said, I need to take my money out to, at some point, because I want to make a business move, right? Before you went to make that move, turns out the bank that you had your money in, they went belly up because they were overexposed in a lot of toxic assets that caused the bank to get, to cripple themselves. And now all of a sudden, guess what? You stuck. You're not insured, right? Over $250,000, even if you even had your money in a secured account, because it had to been in a secured account. Because a lot of these people underwater, they didn't have security on their money. These people that are supposed to be smart, right? People got $250,000 in liquid money. These ain't average people, right? As you would think, right? But no one did their due diligence. The same thing with the FTX scandal. All these people that were pumping FTX, FTX USA and FTX as a whole, right? The branch from Alameda, turned out these people that did no research. They just jumped on because they got caught up in the appeal to authority figure, and this guy being likened to that of the next great who, they liken Sam Bankman-Fried to who? What was it? Remember they're making correlation to him and the young Warren Buffett and all that dumb stuff. Turned out he was a whole fraud. He was a whole scam, right? And everybody that jumped on his bandwagon, the Tom Brady's, the Shaquille O'Neal's, you gotta call it what it is. It was some other, y'all know the name brand people. It's Kevin O'Leary, all these YouTube influencers. They were getting checks, guys. I don't know if y'all know that these guys were getting $100,000 checks from FTX monthly. Some of them were getting $250,000, right? Just to promote that little so-called Ponzi. And a lot of people jumped in that stuff when it was trading way up there, in the stratosphere, and they got what? They got dumped on. Not everybody lost and broke, and they crying foul and don't know what to do. And the gurus, y'all call them the gurus and furus, right? They hide and double down on. No, it was see. That's why we practice the value of saying, hey, due diligence equal discipline. You may not know everything. You may not uncover every single information, data point that you need to make a decision. But guess what? Once you have an interest in something, you'll continuously stay dogged in it till you get what you need. You won't settle along the way. Is my point. You won't settle on any kind of information when you realize that there may be more out there to that. Is my point, right? You stay in the fight is my point a little bit longer. So that that's the fiduciary responsibility that we all have with one another. Why? Because you realize that if the system status quo is designed to keep you off your square, how are you ever going to be successful in the equity market, successful in the real estate market, successful in the entrepreneur endeavor market as a whole, as a business owner, if you don't have places where you can, feel like you can be comfortable asking, certain questions and knowing how to, research properly or whatever the case. You need to have people around you who's going to be genuinely straight up. Like, no, you might need to kind of, go a little bit deeper, right? Sometimes that pause is worth a pound of flesh, right? They say an ounce of prevention is worth more than a pound of flesh. I repeat, an ounce of prevention is worth more than a pound of flesh. Don't jump out the window too soon is my point. Be patient, right? So the ideal of learning, market cycles, right? Looking for, opportunities out there in the market that may help you, garner, some stability when it comes to a lot of this inequitable value that you're dealing with in terms of seeing how the government is there to bail out banks and corporate America before they ever think about bailing out you. Well, if you're going to be a participant in this corporation of America, you need to start realizing that you are independent, sovereign entrepreneur in this industry, and your goal is to take advantage of every loophole that is legal that you possibly can. When I say that, meaning if the Fed's finna go on a printing spree and there's aspects of the market that you feel like you can leverage in that moment, and you're cautious and comfortable being able to take that kind of risk on, then you go hard, right? If you know that there's the opposite of that's getting ready to happen, then guess what? There's also other industries out there that you go in that are backstopping this same very moment that you could also, be a little bit more comfortable investing in those assets, knowing that they're going to give you a better favorable return. Because right now, the first thing people are going to say right now about Bitcoin is that it's a flight to safety now. All of a sudden, why? Because the banks just got exposed. That makes Bitcoin basically legit now. That's what everybody gonna say. This makes Bitcoin legit. It's pretty much doing exactly what it was designed to do, right? It's doing what it was designed to do. And what was that? Be a hedge against the dollar, right? A hedge against U.S. U.S. equities, right? This whole ideal of that, the be a hedge against the banks. Essentially, that's what Bitcoin was designed to do, to take the power out of government and put it in the hands of the people in terms of their ability to move capital and currency, or capital, literally, equity value capital, whatever you want to call it, around the world globally without a middleman, to cut out the middleman fees structure of what it was designed to do. And so now these assets are pumping. Now, again, somebody put gold, exactly, gold as well, right? Gold as well. Right, Rich, brother. What's going on, brother? Snot Boss, see you in the building. Peace, power, profit over. So this is nothing new, in a lot of ways. Now we've been talking about the idea of Bitcoin, in certain aspects when we were kind of talking about it, before I kind of went offline a little bit. What to look for, right? What are you looking for here, right? What are your levels, right? We talked about the 16,000 level, right? Now I haven't updated my chart quite a while, as you can see that, but I was talking about, if we get down near that 16,000, that would be another area to watch. 19,000 was the first area, right? Because we're very emphatic about that 19,000, 20,000 area. If we lose that, I pretty much was saying we're going to come down and crack that 16,000 area. We did. We hit like 15.9, something like that and change. And then we built support, right? We built, right? We built a smaller support there. The market was fighting it, day to day, whatever, trying to keep, Bitcoin relevant. And all it did was it got what they call a layup. This is what you call it. This was an assist. Right? Bitcoin got an assist recently on the back of the banks. Off the back of the banks being exposed, Bitcoin got an assist. Because now this validates all the Bitcoin crypto heads out there that this is why Satoshi Nakamoto came up with this asset to be a hedge against central bankers. At the end of the day, they knew at some point, if this house of cards ever implodes when it comes to central banks' misuse of printing capital, not necessarily being fiduciary responsible for spreading the capital around in an equitable way, at some point when people realize that they were just really doing this to protect those on the wealthy class, either the two things going to happen. Pitchfork's going to come out and they're going to raid the capital, right? Or people going to find an outlet to kind of put their money in other assets that are void of central banking control. And obviously it was easy to transfer to the latter in that perspective, right? Why? Because again, that says you have a lot of hassle dealing with, these crooks and criminals up there in Washington, down the street, right? From where I'm at. right? But here's the reality. Now, all this is good and dandy because again, we caught a nice little bounce here. We obviously got the inverted, head and shoulders here, right? It couldn't have happened at a better time. So we always talk about the value of timing, right? Timing matters, right? Timing matters, right? Inverse head and shoulders here. Now all of a sudden we got a nice little breakout. And then anything we already know, 30,000 gonna be what? Some massive resistance there for Bitcoin, right? This little leg up right here is good and all. Again, it's a good little bag here, right? You talking about from 16 grand up to now 28,000, right? You talking about they ain't double in value, right? In that little bit of time, right? Now you ask yourself, given that it could be looked at as the complete hedge instrument that it was designed to be, is it now valued in a way where capital on the institutional side will also want to be in this asset to give it its outright legitimacy than that of them saying, okay, we pack up, we threw it at the bank, we're going to wash hands and walk away from the bank. We just going to morph into the crypto side of thing, or we'll allocate more capital, I should say, within their portfolios to crypto than they have that of the financial sector or many other assets. In that perspective, you have to ask yourself, are they willing to do that at this point to take Bitcoin to the next level? That's the question you got to ask yourself before you jump out the window, even with Bitcoin now. Why? Because, again, this is good for the moment, but you guys know, you talk about a criminal enterprise. When I say criminal enterprise, I mean, I ain't throwing shots, but I'm throwing shots. You talking about a central bank cabal where these people they're going to fight this fight until there's no fight left in them. And they're going to figure out a way to reassure people that their money is safe, the system is safe, the fiat currency system is safe, right? Bitcoin still has a lot of again, sketchiness attached to it. Why? Because a lot of the congressional side of things haven't really adopted it quite yet mentally. They're getting around to it. Why? Because the feds are implementing their CBDC, right? I don't know if y'all saw that lately. I posted an article on that, I think maybe about a week or so ago. And I'll let everybody know they finally dropped that CBDC under the radar. And a lot of people missed it because we already knew they were going to try to do it at some point, but they actually did it. And it was hushed. Why? Because everybody was focusing on the banks collapsing. They went live on that CBDC, guys. And for some of you guys don't know what that means, what is the CBDC? Anybody post in the chat if you know what that CBDC is.
Central bank digital currency.
Come through with it over Chris. The centralized, basically central bank digital currency is supposed to be the leg up from US, using the US dollar as reserve, and now it becomes the central banking dollar. They're already printing money digitally right now anyway, making up numbers on the screen, imputing it on the screen, sending it through the treasury. The treasury okays it, and then it goes into those particular portals that needs to go to kind of liquidate the market. They're doing it anyway. I don't know if y'all know this, but I think they say there's only $2 trillion in printed cash on the planet in terms of US reserve notes. $2 trillion. How much money that's sitting on the bank, the balance sheet of the Federal Reserve right now? How much money sits in the Federal Reserve banking website right now? In terms of operating cash flow, they have what? What is that number right now in terms of the assets sitting on the central banks right now? Matter of fact, let me run over here real quick. Some of you guys probably already know it. All right. Let's run over here real quick and look at this real quick. Just since we're on that conversation, we're talking about that real quick here. Let me go over here real quick here. 1 second. A lot of this stuff, again, we already talked about this. I mean, you guys already know how to go get this money, man. Y'all know where to go, how to get it, whatever. All right, let's go over here real quick. Right here, let's go to Exhibit A, primary source. Right, primary source. Right. Let's go to the lion's den here, or I like to call it the cockroach den, because all this over here is just roaches. Right, there's roaches over here. Right, because you know what they're doing over here. They're scrambling from one bailout to the next and protecting the wealthy. But nonetheless, let's speak about this here. Right. So under the quantitative tightening process that we just recently came out of, right, it was supposed to be liquidating around about $95 billion every month. I think around about 60-something billion was supposed to be in T-bills, and the other amount was supposed to be in mortgage-backed security, MBSs. Right. Now, keep in mind, they had just started this program supposedly March 2022. They didn't do their first quantitative tightening on the balance sheet until around about June, end of May, June. They prolonged it, they pushed it back. They kept trying to kick the can down the road and buy time, because we know it hurt their heart to actually tighten the financial systems on the stock market. It hurt their heart. Like, they'll probably having a moment like, I don't want to do this right now, because we just got so comfortable having all this power and printing money and throwing it into equity assets. And we're gonna, it's gonna make us feel bad. We're not gonna get good sleep at night, because now we got to take some of that money back. Look what these people did in that period of time. So we talk about from May or June of 2022 to literally right now. They had only pulled off. Pulled off from peak to trough. Let me squeeze down on this so you can see exactly what we're talking about here. You guys got to see this here. This is a hustle. This is why America in trouble for more reason than you can even imagine. Because now they all in on the Ponzi. Because essentially that's what it is. Let's keep it 100. The fact that the debt ceiling has not been raised is a clear example why this whole banking system is a Ponzi. We've been speaking about this stuff for a long time. Yeah, I'm not going to reiterate it no more than what you guys already know. If you guys been following us a while, y'all already know why we went in and we spoke very, demonstrative about the whole system in terms of what it's about. It's a house of cards, right? It's based upon, robbing Peter to pay Paul, right? It's a complete Ponzi. The fact that they can't pay their debt right now, right, is a clear indication that they don't have no profits. The Corporation of America don't have enough substantial profits to pay its debts. Let me put it in layman terms. Hence, that makes it what? Makes it a Ponzi. They still taking in money, though. They still taking in your taxes. They taking in all these fees and penalties and fines, but they can't pay their bills. What does that tell you? Right? What does that tell you? Right? So when we say this is why you have to be very conscious in the financial markets in a way that you can look around the different asset class and figure out how you can now park money in different places, or why you should be parking money in different places. This is the very reason why, because you can't depend on the system to protect you. They're going to go out their way to protect, again, the stakeholders of America is corporate America in their mind. It's not the everyday Main Street, mom and pop, Jane and Joe. It's, basically, the institution that made up, as we know, to be Silicon Valley Bank. All the people who were who were basically, who were going to sustain some losses, right? If that bank was to collapse, because they didn't do their due diligence, they choose to have, over $1 million in unsecured money sitting in a bank that they knew the bank was investing in long-term paper in terms of bonds at increasing interest rates. And they just figured, oh, this is fine. Like that meme with the little dog that's sitting there, this is fine. They sat in that. Guys. And that was supposed to be comparable to them feeling like, okay, well, this is good. Apparently, because no one found that, or felt like this was, it was a problem. Make it make sense. As one would say, make it make sense. I'm like, how? Right? That's exactly how they felt when their stock was crashing. When Silverbank was crashing all the way from $300 down to $30, they're like, close the market. And they actually closed the market. They stopped the stock from trading just to save what little bit of equity was left in there and bail out, what turned out to be what we know now, them bailing out what? Those people who had those deposits that were unsecured, uninsured, as we would say. But after that was the dust settled, and came all these provisions based upon the Treasury and the Federal Reserve. This is how we got to backstop this, guys. We got to make sure we protect who? Who are they protecting now? They've already strained and stressed out the American people on the Main Street side of things with inflation. Like that money is already, in trouble. Again, y'all saw the studies that were coming out over the last 3, 4, 5 months. The American people barely have $500, in their savings account. Credit card debt going through the roof. Biggest credit card debt in American history that came about so fast in history. All these things you're seeing is the stress test on the American people. Essentially, the middle class and proverbially the poor. But essentially, they're choking out the middle class now more and more now. every day someone, and I say every day meaning someone, but we know it's really someone's with the S, are leaving middle class status and going down to under every day. If it happened to a well-capitalized bank in Silicon Valley Bank that had all this promising value in terms of assets under management, and they squandered it by gambling, doing executive bonuses, paying their workers all the kind of excessive money, taking in their VC capital money, uninsured, and think they're going to be safe. In the interim of seeing the Feds raising rates higher for longer, Jay Powell not flinching, even though they were trying to force him off his square from raising interest rate to fight inflation, because greedy people want to continue to stay greedy at the behest of American people going under. These people sat there and laughed at the average Main Street American person because they knew they was going to be protected. Not so much, no, I can say that whether they knew they was going to be protected, if they ever kind of went under, the Feds don't come in to bail them out. Turned out, seemed like they must have knew something. Turns out, seems they must have knew something. Why? Because I don't know if you guys knew this or not, but I'm pretty sure you do. You've been following like I have. The actual CEO of Silicon Valley Bank sat on the board for the federal governor of San Francisco. He sat on the board with what her name was, that Mary Daly. He sat on that same chair with her, in that same board with her, implementing policies to show up, that region for a central bank in terms of policy that may affect them or adverse affect them. He sat on the board and made decisions for that. All along while he was running a dirty bank. Think about that for a moment. He was running a dirty bank scheme going on. It was legal, but it was dirty because they showed no fiduciary responsibility in terms of they depositors. And they made all those bad bets and did not pivot. They did not hedge. The person that was supposed to be watching the money, that person quit. They say, I think, about 12 to 7 months before this whole blew up, and they never replaced that person. They never replaced that person. And they just watched this thing just kind of implode on itself. While this guy was sitting on the board and he sold stocks about a few weeks before the hammer came down. Like, you couldn't make this stuff up. It's that kind of conversation. You say, you cannot make this kind of stuff up. You could not make this stuff up. So guess what? The Feds are back to doing what? When y'all see that right there, what is this? When y'all see this right here, this is the Fed balance sheet. At its peak, it was around about 8,965, right? In that bit of time, look at it, I ain't making this up. Y'all see the around what? Y'all see the date right there, around May, June, right? So from May or June of last year to where we are today, and it really didn't turn down until really after what? As you see around what? Around mid-June near July, right? To be honest. So we can really say, June, July. We'll say July. So from July of 2022 to now, right? Till we hit this peak point here, or this, this pullback here in March of 2021. How many months is that? From basically July to March on the calendar cycle, how many months is that?
Like 8.
Somebody give me that.
It's like 9 months.
So you got what? July, you got what? August, September, October, November, December, January, February, March, right? So about 8 months, right? 7-8 months, right? And that's being generous in terms of when you see, salt really began to turn down, right? Most people say it didn't really begin to really turn down until we got beyond what? September. Because look, right here, it was still in the 8s, right here, 8.8. It was literally near 8.9 here. I ain't making this up, right? I'm trying to be generous and give them some leeway. I'm trying to bail them out, right? But I can't. This is how ragged it is. So it's supposed to have started in March of 2022. It didn't really kick off to June. And it really didn't start coming off the balance sheet until around after September. Look right here. I'm not making this up. We're still sitting at 8.8. Off 8.9 back in March and June, it was still sitting at 8.8 way in September. So about another 3, 4, 5 month differential there. And the balance sheet really went nowhere. And they talking about fighting inflation. And then all of a sudden, it began to kind of roll off a little bit because it became apparent that inflation is not going anywhere. They couldn't get their Fed pivot. They couldn't get the pause that they wanted. This whole lie that came about in the month of June of 2022. They pushed that narrative. Turned out that was a lie. We knew it was a lie anyway because we were watching the commodity market. It wasn't new to us. But we was already on top of this. We say this ain't going to last. Don't get excited. This whole run back in this stock market where the markets ran back up and tried to test this whole, this ideal or going where we were. Matter of fact, let me go over here real quick. This idea that we're going to go back up to, apparently all-time highs again, that, the fight on inflation was over.
No landing.
Right. All this no landing, new stuff. That's the new one. They're over. That's the new hustle. Like no landing. Where they do that at? That sounds like some dance move. What the dance called? No landing. Where they do that at? Not where I'm from. But again, you couldn't make this stuff up, right? Again, just the insidious nature of again the level of greed and mismanagement of these equity analysts and economists. It was just I couldn't make. It was a headache. But the market had got all the way back up towards $426 some odd dollars a share.
Right? So brother Obot, this kind of leaves no choice for Powell but to raise rates on Wednesday, right?
Good question. Now here's because that's the next conversation that everybody's been hearing, right? Whether they should or should not raise rates, given the fact that we have the issues with the banks. Janet Yellen just appeared before Congress. Just last week, right? She went on there and pulled that same dog and pony show. Economy is fine. The banking system is fine. We've heard that before, right? Remember the whole idea of the economy, everything is great, right? Transitory it's just transitory. It's just we know when they say those things, it really isn't. But here's the kicker. We talked about the Feds being in the catch-22, right? They just had they printed money back onto the balance sheet, in essence, to backstop the banks. Anytime they print money, that is taxpayers' money. They told you guys that it was not going to be on the backs of taxpayers, but they had to print money in advance to offer money to the lending facility to backstop the bank. That's the whole what's it called? BTFP, whatever it's called. This is banking trust facility plan. It's basically the bailout lending facility that banks get to go to borrow money if they're in distress, right? They made up this new branch out of thin air, right? That's how this stuff works. But they didn't have enough money in advance that they can take from the bonds that these banks had, these distressed banks that they had, as collateral, to use that as money to backstop, everybody. So they had to print money print money out of thin air to put this facility in place as at least a starting point to cover any banks that may be in distress. Hence, that's why you saw a run on the balance sheet back again. Look right here. We're sitting at 8.3 at around March 8th. The lowest we had got. Literally out of nowhere, right? We're talking about nowhere. You put on another 8.3 and 8.6. To me, last time I checked my math correct, that's like $300 billion, right? Look where we are in terms of level. That puts us right back to where we were during November, around about November of 2022. So essentially, we had lost only, given the peak, 8.9, 8.6. We took back half of that quantitative tightening in under 1 week on the back of trying to bail out banks. That it took the roll off the balance sheet in almost 7, 8, 9 months. Make it make sense. This is what you call quantitative easing. Go ahead, over.
My next question in regards to that would be, did the rates being raised up have to do with the banks being crushed like that? And if they raise them again and keep raising up the rate, so this is going to be a domino effect, right? So
ongoing effect. That's why they call it. It's a contagion. Y'all probably been hearing that word contagion a lot, right? You see all these articles, right? Contagion basically means that it's contagious. It affects all of them. Why? Because it shows who's exposed to dirty paper. When we say dirty paper, we mean dirty treasury. They had a lot of dirty treasuries under management. They didn't hedge properly, or they had toxic assets that wasn't necessarily properly managed in a way to hedge against even some of those. They were highly exposed in tech when they should not have been. When tech was starting to crash, they still sitting in them things overly leveraged, right? Kathy Woods type, right? They're still buying Coinbase and Roku all the way down from $300 a share, $200 a share, all the way to it went down to like $30 and $40 a share. Make it make sense, right? This is that's why I say, I'll put it this way: if you guys had the money that these companies, these analysts, or these hedge funds, or these fund managers were able to kind of take in to mismanage of shareholders' money just for the sake that they can say that they're early and not late, and that's why they can take this hit. I have no doubt in my mind, y'all probably be better fiduciary responsible than these idiots. Because that just shows you the level of greed and idiocy that you think people who have degrees in this stuff can't seem to see some of the most basic fundamental stress levels that's happening in and around everyday America that we get to see whether we in it or not. We're doing a lot better than a lot of our peers possibly, but still at the end of the day, we know it for what it is. Why? Because a lot of us came from it. The fact that they misread American people at that level so much and so often and so blatantly shows you that these people don't know what the hell they're doing. All the way up to the Secretary of Treasury. All the way up to the Secretary of Treasury. These are paid shields for what? The 1%ers. They're there to be, as they say, intermediaries for being able to distinguish policy from budgets that's coming through from Congress so they can get theirs off the top. They're friends with these people. They go to these, white glove, $5,000 luncheons and dinner plates. These are people who go to those things because they need to, hey, I'll send you a little bag. Make sure you get that policy liquid. Yeah, we got you, Fred. We got you, Jim. We got you, so-and-so. This is essentially, this is the extent of the situation here. So you say to yourself, okay, well, if it took the Fed's raising rates, up at this point now, 50 bips, or in this case, 500 bips from the base, from the floor, because we bought there now, we at 4.5, right? We're just going and call it what it is, right? Because again, y'all know I was saying that way back in 2021, right? 2022, we going above 5% on interest rates. Don't kid yourself. Wall Street was saying, no, we're gonna stop at 3.5. Oh, then it turned and we're gonna stop at 4. Oh no, we're gonna stop at 4.25. Oh no, we're gonna stop at 4.5. Here we are sitting up here at 4.5, near 4.75 now. And we know, but before this banking crisis hit, you asked that question, Brother Ramir, before this banking sector issue turned over, we was on our way to 6. We had priced in 50 bips for the next rate hike. Based upon the job numbers we got back in January, 500,000 jobs. February, another 300,000. Job market ain't letting up. Service sector is booming. That's a problem for the Fed because that's the most volatile reading in the PCE. It's the most volatile reading in the CPI. They've already stripped out food and energy. Rents are a big equivalency value because rents are still up. Right? Remember they're saying rents are going to price? Saying rent prices were going to crash? On what planet? People still getting top dollar for their rental properties. Now, I'm one of them. The reality is that you're dealing with the value of how they made it so they've made it so they've destabilized the economy so much by all this excessive printing that nothing can balance itself out properly the way it needs to in terms of everybody playing a succinct part. Because if one is up, another one's going to be sharply down. Does that make sense? The fact that interest rates are up only 500 bips or 4.75 basis points from the bottom, and banks are already crying uncle right now. The rate of inflation is above 6, according to the BLSI, Bureau of Labor Statistics. Real inflation is sitting at around 1,100 bips or 1,200 bips. Basically, we know it's double than what it is because they stripped out again food and energy, the biggest cost that you have to deal with in terms of dealing with discretionary tax in terms of inflation. Make that make sense. So they already giving you a cooked number from the BLSI and the government. The PCE that the Federal Reserve he don't even look at CPI. It's a window dressing for them. They look at the PCE. Why? Because it strips out a lot. It strips out even more things than the CPI strip out to make the Fed look good. And that number came in high recently. Think about that. They're trying to cook the book so much, and it's still working against them. At the rate of inflation coming down to 2%, you're talking about theoretically, that's about a 2 to 3 year window. Because again, when people find out a way to kind of survive, when you're then taxing them and they have to go out and get 2 or 3 other jobs and beg for a higher pay increase, What does that happen? That stabilizes the what? The rate of inflation falling. At some point, it's going to get sticky. Like we talked about this before. Ain't nothing new. We went over this stuff a million times. Y'all know this stuff. We went over this stuff a million times. It's going to become sticky, and they're going to have a hard time fighting it. Why? Because they refuse to do the one thing that they could have done early on to fix it. They should have raised rates well above the interest rate level when they was at a point where they could do it, when everybody was still strong, and fight inflation that way. Except they chose to kick the can down the road the same way they did with the whole, inflation is transitory thing they did all in 2021, while it continues to went up and up and up, and they continue to print more and more money. Now they're forced to print money. They don't have to, but they're being forced to print money by wealthy people to backstop these failing banks. What's going on, Oprah Brandon? Peace, power, profit. Happy to have you in the building. I see you in the house. What's going on, Mr. Q Mason in the building? I see you as well, right? Right? You're right. They have those 5,000 dental plates so they can keep. Hey, it is what it is, right? We already know the business going on here, right? Here's what's interesting. Here's what's interesting, but not really interesting. If they crime with a 4.5 to 4.75 basis point in the rate hike in terms of the interest rates, and they can't refinance or pay their, the interest on the loans that they got basically sitting at zero because they didn't rebalance their books to deal with this level of what extra pressure that's going to come about from interest rates raising. They didn't rebalance space, they didn't hedge. What does that really tell you about the strength of the economy that they kept lying, telling you that it was strong literally for the past year and 12 months? A year and 7 months. Remember, they've been on this, the economy is strong almost for all of 2022, while we saw it not being strong. They was talking about that well back into the fall of 2021. Here it is, the spring of 2023, and these idiots are still going before the American people, presidents, Secretary of Treasury, press secretary, all these economists. The economy is Wall Street. The economy is strong. The consumer is resilient. They're good to go. They can weather this inflationary storm. Putting you out there to be cannon fodder so they can have the ability to lie to investors, act like this is still a risk-on marketplace, so they can keep equities higher for longer. At some point, if they choose to want to dump, they'll dump on top of retail dumb money because they know everybody's chasing the wealth effect, and they know that equities or assets, as it be, given what we just came out of the last 14 years, is in their mind the fastest beeline to get to a good, wealthy, stable lifestyle. But here's what's crazy about that. Here's what's actually criminal about it too. Again, we talk about market cycles, guys. We talk about market cycles all the time. That ship has sailed for now, only for now. Now's the time to be prudent. We did a whole, near 2 years of prepping for this moment. Did we not? We prepped for this. We literally prepped for this moment. So much so that even when I went offline for a little while to get my little stuff together after getting COVID, all this stuff, so much so that all the videos that we did, we didn't have to really do anything but follow what we kind of went over already and break down exactly what we needed to do. It was just a game of, okay, let me lessen my exposure. I already kind of got an idea of where I'm at, where the market is headed, what I need to do. Let me go out there and execute. That's what this was all about. This is a game of execution. Now, go execute. Don't, you see it for what it is at this point. Go execute. Right? The tea leaves were already there. We get it. We get it. We get it. The tea leaves are already there. Let's go execute now. Right? We got our all-time high peak. We got a chance to sell at the top several times. All right, before we even hit, let me get off this chart. Let me go to the let me get this let me get the adjustment off. Let me go to regular session to pull that off. We already hit a point where we got to I go to 4-hour chart, where we had hit, peak saturation in the market in terms of, again, just, blow tops, everything you got. Even if you get a chance to sell it around 470, you got another chance around 455. We had a pullback from basically the beginning of the year, 2022. We came down and hit 470, dropped a whole 70-something points, right? Whole 70-something points in 3 months. That was like 1 quarter worth of pullback in the market. That's your fiscal quarter right there. And then you got a nice snapback because we got extremely oversold. Snap back up to 450, you still had a chance to get out. The people that chose then, to take some of the chips off the table at that point that was highly in tech, I don't know what they were thinking if you didn't take money off the table. I know I did. I lessened a lot of my exposure and some of them high flying growth stocks at that point. That was your second chance right there. Second chance of life. It's a new lease on life. Because nothing at that point was telling you that the market was going to be able to bounce back, given the fact that the Feds had literally came out and announced we're going to start quantitative tightening, 95 billion. We're going to start raising rates. They did a little quarter basis point in the beginning, then they began to go through the cycle of that. Everything that Wall Street knew at that point was highly respective to them to say, you know, hey guys, we need you guys to realize we're going to go through a tightening cycle. Inflation is too high. You talking about at that point, inflation was over 7%, 7-8%. And people still were like, no, this is still a risk-on marketplace. What are you talking about? Tesla's strong, bro. Apple can weather this storm. Google is great, bro. What you talking about? Amazon about that life, bro. And I'm looking at them like, what? Are you kidding me? Are you serious? Right? Like, serious. Like, are you serious? You don't know what you're talking about, bro. Elon is the future, bro. Yeah, I like Tesla too, but I ain't crazy.
They married to the company. Not supposed to be married.
The biggest problem that you get with a lot of investors that don't understand the game. They come in with personality worship and all on their mind. They come from that, I don't know, that's them TikTok, you know, the new breeds. I don't know where they come from. They ain't, look, no disrespect, but no, we don't get down like that, right? We realize the power, you know, in understanding how the system works. The idea that we went through all that hours and hours and hours of breaking down these videos and putting out videos about the banking system and understanding how the markets work and real estate and all this stuff. We went through a lot of stuff. Like, but Chris, you post a lot of stuff. I mean, a lot of good breakdowns in terms of what to look at. It's no doubt in my mind, given that what we know now, while a lot of us should be struggling to figure out what we should be doing next. The sectors, the rotation, the cycles, right? No sweat here, right? So some would say, okay, the market is buying time again. Of course they are. They're trying to. Because the cycle here would have you to believe. Let me show you exactly what I'm talking about on a bigger time frame, right? Let me go to a bigger time frame. I know I shouldn't go to 3 months. It ain't gonna look really that good. Slightly, but it will a little bit. Right? I just let's do the 1 month. If you look at this here, right? All right, our latest, matter of fact, we got it actually here. But the latest, where is that? It's not going to show this candle here. It's this candle up here. Let's see. Let me do this. I want to show you something real quick, just from GP. All right. If we even play that game of cycles, right? Because y'all know I'm of the what, you know, the waters of noon, right? I'm of the waters of noon, right? I'm old school. Still waters run deep. I use a lot of analogies based upon the values of cycles for a reason. Why? Because we understand the value in that. We know about our sine waves, right? I mean, y'all used to talk religious about sine waves. Y'all know I used to go in on these sine waves, right? The importance of understanding the value of balance, right? Equilibrium, right? When you split the middle and you realize where you at inside of the cycle, right? If you're in a capitulation zone, or if you're in a rebalancing zone, or wherever you are, right? I'm just putting this on here just for, for GP, right? We know this is peak value, right? Down here, we know that this is what? Trough value, right? Right. We'll just say that in terms of the all-time low. Well, in this last 52-week, calendar perspective, right? It's not all-time low, but you get my point in terms of this cycle. For the most part, we've been trying to stick right at the line of neutrality. Given the fact that, again, we got war, we got staggering inflation, but it's coming down now, of course, but the degradation of or the carnage of it is now starting to reverberate through the market. Now you're starting to feel what that regressive tax feels like on your savings account, your spending, your buying power in the grocery store, gas station. You want to go out and buy a car, buy a home. Again, prime rates were up near 7% at the peak. It went from basically near two in the high twos and low threes up to 7 in short of the time frame, locking in rates. And you just got a small reprieve here recently, right? But we'll know if it's gonna last or not, given this nature of this whole bill and the banks out. But nonetheless, I'm just using it as a cycle. If we've yet to even call the recession, which they keep tap dancing around that, right? They tap dancing around the grave with 1 foot in. And they really think that they can, pull off a soft landing, a no landing. Like, again, what's the no landing? I'm still trying to, they come up with stuff all the time. They still trying to pull that off. And the one thing the Feds are scared of is what? The wealth effect coming back. Demand not curtailing a lot of his spending habits. which keeps inflation higher for longer. That's what basically it is, right? Y'all know we went over that math a long time ago in terms of what feeds inflation. No secret there. The fact that the balance sheet just picked up another $300 billion out of nowhere overnight, I'm going to ask a very simple question. Do y'all think that $300 billion that just went back on the Fed balance sheet, is it going to affect inflation or not? Is it going to affect inflation or not? I'm asking anybody. Do y'all think that $300 billion is going to affect inflation? Or the rate of inflation falling so fast now it won't even matter? That's $300 billion that just went back onto the bank on the balance sheet.
Yes.
Why do you say yes, brother Ramir? If you don't mind me asking, who was that?
Yeah, because they've set us back what 5 or 6 months, so that means that inflation will continue to rise.
That time frame we looked at on the federal balance sheet, right? Again, they wiped out that amount of work in literally 1 week. You went from here all the way back here. Now, again, we talked about the value of the contagion, right? We know there's other banks out there that's yet to kind of get blowed up. They're dancing around the graveyard now, hoping the media don't turn the lens on them, but they're already out there. Why do we know there's other banks out there that have toxic assets on their balance sheet? How do we know that?
Most times they all connected.
They lend to one another, right? They know a lot of what's going on with these companies and their balance sheets, right? They know what's companies that they deal with that are junk bond status or bad credit ratings, and taking on toxic paper. They know the ones that are going long in bonds exposed to assets, right? They see this stuff.
They invested most of the stuff.
Exactly. Yet no one blew the whistle on these banks. Why? Because they all inside the what? They're in the same game. Right, the game that can't shoot straight. Y'all remember that old school movie? That's the game that can't shoot straight. That's exactly what the banking sector is right now. If there was ever a movie to liken to the banking sector right now, it would be the game that couldn't shoot straight. I would say go look that movie up if you've never seen it before. That's essentially what the banking sector look like in America right now. Not just in America, but Europe too. Because we didn't even talk about Credit Suisse, the most corrupt criminal bank literally on the planet. On the planet. The same way the UN has said that Ukraine is the most corrupt country on the planet before the war kicked off, all of a sudden they became the best darling country in the world only because Russia took them to war. Ain't that something? The UN said Ukraine was the most corrupt country on the planet. And now all of a sudden, we got to fight with Ukraine. Why? Because Russia kicked in their front door because they didn't like the way they were treating a lot of people in some regions of Russia that was in Ukraine. And U.S. was backing it, funding it. And they mad because they don't want them encroaching on their front door when they told them they wasn't supposed to. You can make this stuff up. You're starting to see this. They're crumbling and panicking right before y'all very eyes. Y'all know what I'm saying without me saying it. Y'all, we here. I ain't got to say it live on live, but y'all know exactly what I'm saying. It's starting to crumble. It's starting to, you seeing the fractures in the system, in the status quo, and they're scared shiftless because you guys are getting smarter too. And you starting to realize what you was researching on the other end is now starting to parlay and marry into what you figured out on the financial side of things. And now you're more well-equipped to deal with this stuff. Why? Because your biases are respective in the right places now. And when people call you crazy and no, you don't know what you're talking about and blah, 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 and you looking at them like, you ain't got to say that. I just say less. Say less. Just say less and walk around with your head up because everything you was already knowing and you've been doing the research for is coming to fruition. And you seeing how the roaches and the rats are scrambling. They don't know what to do. They exposed. The emperor has no clothes. Banks are being, you see, I've been preaching against the bank for the longest. I've been like, dude, this is why I'm FINRA over FDIC. Man, but you need the bank, bro. You're going to need the banks to do this stuff. Like, bro, that's the whole idea of these fintech companies coming about. The whole idea of why crypto came about. Wasn't nothing new to us. We were already kind of going down those paths, experimenting here and there, researching, doing our due diligence where we can, and we're starting to see that now. And now, here come the exposing. Turns out look, real quick. What's going on, Oba Brandon? Seeing in the building. Peace, my private Oba in the building. Resident hospital in the building, holding it down.
Peace, family. Peace. How y'all doing?
Doing well, man. Good to see you. Good to hear your voice, man. Good to see all you guys, man. Just going through this, man. We got to get down to the nitty gritty here because y'all know we've been planning for this. Hey, y'all know my favorite saying. Before I went offline with y'all for a minute, y'all know my favorite saying. What my favorite saying? I've been saving that what?
Saving that bacon.
I was saving that bacon, bro.
Saving that bacon.
Like Will Smith, I was saving that bacon. Bro, I was saving that bacon for this day because we knew it was gonna come into fruition, right? What we're seeing now is evident to that. Exhibit A. I'm gonna run with my little page real quick for a second here. I must be doing it wrong. Let me see. Let me get out of it because I'm trying to be fancy. I need to go back to the actual page here. But I want to just show you this here because people ask the question: do you think is the contagion contained? What do we mean by that? I mean, are the other banks, are they safe now? I get people who hit me up and ask me that question. I get people in my DMs like crazy. Hey man, what do you think about the banks? You know, what's going on? What's your take on it? Right? I go this place, I listen to this. What's your take too? Right? Because we've been following this stuff wherever you can. And the contagion aspect of this is very important. Why? Because again, it exposes what we talked about, what Oberchris just said too. But what a lot of you guys already know, these banks know what the other banks look like. They have the quant funds, they have the research teams to look into the other banks because banks invest in other banks for that same reason, right? In terms of the exposure, they know what's on the balance sheet, what assets they're in. Again, you couldn't make this stuff up. Like it's that simple. Don't overthink it. Think about this from this perspective, right? This meme right here was put out in October 2022, right? Turned out, who knew? Well, a lot of people already knew because Credit Suisse was already in trouble way back then. They was in trouble before that. Y'all remember Credit Suisse had dumped way back a while back. We can go to the chart and look at that, but nonetheless, we know that, again, that's another conversation. We jump deep into that. But this is why I said the contagion effect is still not contained. I mean, there's going to be more banks. I'm going to take y'all to Exhibit B. We kind of went through the baseline. This right here. Y'all see my screen here? Is it showing here? It's okay, it's showing. I couldn't see it. Right? What is this right here? Anybody? What does that say right there? Anybody care to opine on that scenario right there? What do y'all see right there in front of y'all faces right there? Put it in the chat.
U.S. banks have over $620 billion in realized losses, FDIC says.
Could you say that with your chest over a little bit? How much they have in losses? I'm sorry, I didn't get that.
Just then, the U.S. banks have over $620 billion in unrealized losses, FDIC says. That's over $500 billion.
So that's over $500 billion in unrealized losses. What are unrealized losses? That means that's toxic paper you have sitting on your balance sheet that you're hoping to turn into what? Either realized losses or what? Break even. Make it make sense. That means, remember the thing they told y'all about when y'all were learning how to trade for the first time? Never get caught up in what? Hoping the stock gonna go back up. Well, the bank's been practicing. The bank's been practicing hopium, guys. Make it make sense. I ain't making this up, bro. Make it make sense. They've been practicing straight hopium, bro. And these supposed to be some of the smartest people in the room. They witnessed the biggest bull run ever in American history. The market went up over. Y'all saw the market like I did, bro. The market went from basically zero. I didn't say zero, but 2008 on that low. They printed money from that point all the way up to what? 2022 before they stopped. Make it make sense. That's all I'm asking. Make it make sense.
So now that we realize, well, that they realizing that this type of money printing and everything is unsustainable, like, is this part of the normal cycle of things? And like, how long could this last until we see like a bottom? Like, what will be the signal? Like, I don't know.
Here's the thing. Again, the contagion effect is based upon the one thing that they can't fix by papering over it. See, this is the whole modus operandi of the Federal Reserve has always been that they can throw money at everything to fix it, right? That's what they do trying to do with Ukraine, right? They try to do that with the bad, treaties that and policies they established with China and many other scenarios, right? Even in Europe and whatever. They always thought they can come to the table with what? Fake fiat currency backed by no value of real true commodity, even an aspect of production in America, and say that, you're secured based upon this, right? But when we talk about the value of the, or I should say the phenomenon of what inflation really is that's what is the definition of inflation? And in layman terms, it's too what? Too much what? Money chasing what? Too what?
Pure
Too
goods.
fewer goods. That's the base case definition of inflation. If you got so much money out there, M2 money supply was through the roof. It fell off a lot recently, right? I can show you right here on the M2 money supply thing here, but it doesn't matter at this point now because the rate of inflation is already what? Underway, right? That shipped and sailed. That they can't do anything in terms of that, in terms of even pulling the M2 money supply back some that's out there circulating as if it would do anything to fight inflation. It can help a little bit, but it's not going to be enough. It's too late in the game. Look at the rate of a money inflation from going back to 1960 all the way to where we hit that peak around about what 7.6 value in 2021. Now I'm just using it as a simple scenario here. They tried to pull back the money supply. It's the same reality, right? We went from 7.6 down to around about 70. We dropped off about 60 basis point, or it'll be because equivalent about 60 basis point in this perspective, right? Here it is. Here's the kicker. That ain't enough now to kind of stop the rolling snowball effect of inflation, right? Pulling back the money supply. Why? Because a lot of the money that's still illiquid out there, that's still backstopping a lot of these bad fiduciary responsibility decisions that's been happening in the marketplace based upon the banking sector, because we putting them under the microscope. Guess who's sitting on all that paper? The other paper, because I talked about this also before I went offline with you guys. I said the only thing that's going to prop the market up this point going forward is going to be what? The reverse repo facility. Remember when it got over $1 trillion and then it went from $1 trillion up to near $2 trillion? It's in about over $2 trillion right now. Couldn't make this stuff up. Here it is right here. Like, I'm like, and this is it's crazy, guys. It is completely crazy. This is going back to 2020 area. Look at the reverse repo facility from that point on. Before that, it was basically at flat line. It was going nowhere. All right, we're talking about, at this point, less than $1 trillion. We're talking about 100 billion back in 2017. 100, as you see here, I ain't making this up. We got up 200 billion around about March of 2020. The first kickoff in terms of COVID. It went back down, and then the Fed just unleashed what? The mother of all pumps in the marketplace with all the helicopter money. And guess what? The reverse repo facility went through the roof. This is the way that the banking sector backstops a lot of the risk also behind their reserves or their liquidity access through the reverse repo operation. This is basically where you get to trade your bonds for cash, right? Banks get to trade their bonds, and the Feds will get them cash. They would take that now cash because their bonds will, in their mind, be safer at the Fed than it would be, in their own books. They can now take that new liquidity in that terms of cash, and have enough money on hand in terms of their reserves that they need to run their banks from day-to-day operation. A good portion of that money also goes into investments, into buying actually new bonds. So this is them gambling with the money that was already printed behind the scene from the Fed. This is an extra $2 trillion that's sitting in the repo market that's not even accounted for when you think about all the money that's sitting on the banking sheets in terms of the balance sheet of the Federal Reserve. And they mismanaging this facility, because this is a facility, believe it or not. The reverse repo operations, this is a facility that the Fed allows only for what? The banking industry. You can't go pull money from the reverse repo operations as a citizen. They're gonna like, who you is? You showed up at the auction, bro. Who your people? like security? You don't get to partake in this. This is only for banks and lenders, and so to speak. In that perspective, they get to show up to these auctions. And that's $2 trillion right there. On top of the other 6 trillion, right? That's sitting over there at the federal balance sheet. I'm just saying, make it make sense, right? So here we are. We're like, okay, well, right? Let me just do this window thing. That was easy. I could jump back and forth in these tabs. I'm like, how is the contagion of the bank scenario fixed? So far, I'm just saying, they printed 300 billion, right, to backstop the banks, right? They've already, meaning bad banks have already tapped into 150, I think 152 or 156 billion dollars of that 300 billion already. Like, as soon as the Feds released that 300 billion back into the system, that lending facility window, guess what? All these dirty banks, they ran to it, and now they've already locked in 156 billion dollars of it right now.
Over make it seems like the Fed is trying to fail the banks on purpose with that.
Well, it would seem to be that based upon the interest rate.
Yeah.
Because they think the banks. Let me say it this way. Y'all know one of my other favorite movies. Y'all know I like you these movie analogies, right? I'm gonna take y'all back to Harlem Nights. Are you in charge of the girls? I am in charge of the girls. Are you in charge of the girls, Vera? Right? I'm in charge of the girls, right? The Fed's supposed to be in charge of the banks. Are they not? The Feds are in charge of the banks. So you're going to tell me that Jerome Powell, Neil Kashkar, Mary Daly, Bostic, James, but all these people underneath the Fed, from the governors, the committee board, on the FOMC themselves, all the economists that actually work for the Federal Reserve, because there's hundreds of them that actually work for the Feds. Y'all been to tell me that none of these people saw this stuff coming? I'm asking for a friend. No one saw this coming. They had already signaled that's going to raise rates. So you mean to me First Republic didn't know that this was coming? Silicon Valley Bank didn't know this was coming? And the sad thing about, we talked about the Silicon Valley Bank, the actual board, the CEO of Silicon Valley Bank sits on the board of the federal governor of San Francisco. He sits on the board with Mary Daly. He implements policy to protect his bank. The governor of California had money parked in the Silicon Valley Bank. The governor. From his businesses and some of his personal value. All these people knew this was happening, and no one said nothing or batted the eye. Make it make sense. They sitting on all these unrealized losses, sitting on bad paper, and they sitting there just kicking the can down the road, hoping the Fed's going to what? Cut rates. Yet inflation is still trending up. Unemployment is still what? Staying low. Jobless claims are still going what? Staying balanced to going lower. They ain't really just shooting up like all these kind of job losses they were telling you about. Non-farm payroll is still showing what? Job increases. Hourly wages are staying sticky, if not barely increasing, enough where it still keeps problematic values of what? Inflation staying higher for longer. Service sector jobs are going through the roof right now because people are taking 2 or 3 jobs or quick jobs that are more service-oriented. They trying to fight inflation their own way because they got no help from the government. Make it make sense. And they telling you that inflation is going to rocket down. Who's telling you that, though? The people who got a dog in the fight, Wall Street. That ain't what the numbers say. The bank's showing you right now that they stressing. The Feds went through a whole stress test scenario back in 2020 based upon COVID when they put them actually on probation. Remember the bank was on probation. Around Q2, Q3 of 2020, they was on probation by the Federal Reserve because they can keep a balance sheet and have enough capital in reserve to lend out money during the PPI, the PPP loans, and all that stuff. The EIDL loan, they put them on reserve. They came off of probation around, I think it was like where I'm up with. I think like the end of 2021. They had been on probation that whole time, and the Feds took them off around Q3 or Q4 2021 and said, now y'all can go out there and do stock buybacks, and they couldn't wait to do them stuff. JP Morgan, they ran the buyback stocks. All the other stocks like Silicon Valley, all that stuff, they went and ran and bought back stocks instead of showing up their balance sheets. Like how you come make this stuff up? $620 billion in unrealized losses. The FDIC says. This is the FDIC. This is why I'm FINRA over FDIC. As I've been saying for years now. This is why I got that T-shirt that says FINRA, And I not like I trust them either like that, but I understand the value of being able to use the brokerage account at a more leveraged perspective than now sitting in the money market account collecting ducks or peanuts. Even though it's been paying out pretty good recently, only because interest has been going up. Even beyond that, I'm not going to have banks mismanaging my value for peanuts on the dollar in a disrespectful way, scrutinize you, take you through all these rigmarole just for you to park your money in it so they can turn around and take it and gamble with it. And you ain't really getting the benefit from it. Like, what's the use? Like, what do you need that scenario for? You got to go through hoops to get your money out. Go, moving on. Couldn't make this stuff up. $620 billion in unrealized losses. Like, this is the extent of everybody like, I love my bank. Really? Really? Yeah, I mean, I got, some pretty decent banks. I got USA. We got the gauntlet in that regard, Navy Federal, Penn Federal. But credit unions, though, we talking about credit unions more so than dealing with these fee-hungry, crooked behind, dusty behind banks that they're doing the most idiotic things with your money because they think they safe. Why? Because they got bailed out in 2008 in a lot of ways because they were the ones that were in the lenders, and now they're getting bailed out again for bad fiduciary responsible practices. Make it make sense. But they tell you there's no contagion effect. Last time I checked, if $620 billion is sitting in terms of unrealized losses, how you gonna make all that money back in this environment if interest rates gonna stay up higher for longer? That means you're still being capped at a point where you have to pay higher fees on to service your debt at interest rates above 4.5%. Because if Jerome Powell chose not to raise interest rates not a day after today, just so you know, the 16th largest bank in America crumbled under 4.5% interest rates. The 16th largest bank in America crumbled under 4.5% interest rates. And many others are already at that door right now. They just yet to be exposed to being brought to the forefront of the media. A lot of them were already under. A lot of them were already under at 4%. They just been kicking the can down the road, hoping that the media don't get a wind of who they are. $620 billion in unrealized losses, but yet they got a $2 trillion window of the reverse repo operation that they can tap into with this auction, and they didn't mismanage those funds. This is FTX all over again in its own way. They talked about Sam Bankman-Fried, the crook that he is, which he is. They said this is why crypto is a scam and this, that, and the third, and blah, 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 needs to be regulated, and it's wild, wild west, and this, that, and the third. They have mismanagement of clients' funds and all this stuff. Remember, y'all heard the talking points. Turned out they were doing the same thing. Maybe not at the scale that he was doing it, but they were still doing some of the same practices, bad fiduciary responsible practice. They were robbing Peter to pay Paul. That's exactly what the bank's been doing. And this is the extent of, again, the government that most people run around saying, oh, I just believe, I trust the government, blah, blah, blah. I'm like, all right. I'm like, okay. So you have to realize this stuff from a place of understanding how you maneuver it. Everything, again, we've been discussing is based upon you being able to say, well, hey, I have different outlets that I can look into. I have different lanes that I can, navigate, right? I have different, perspectives that I can now, turn over inside my, my processes in terms of how I'm going to manage my funds and my money, and I not be caught up in the gauntlet of thinking there's only one way to get it, right? Again, they said that the Tina trade is dead, right? There is no other alternative, right? That's this whole idea. They pushed that can down the road for so long that can just disintegrated. They kicked it so long, it's disintegrated. That can doesn't exist any longer at this point, right? Now you're at a point now where it's like, okay, well, guess what? The bond market is what? Popping, right? The I bonds, look, they telling y'all, again, that's just one. It's one of many. It's one of many. And you don't have to even go to a bank. Again, I bonds, this latest maturity round ends around the 30th of April. Them things paying by 6.8. Short-term treasuries. Again, you want to fight the S&P 500 to crack out some, all the volatility and gains, or squeeze out that little money. Even more, again, we talk about money market, or you want to be able to say, okay, I go straight to the lending desk directly. This is straight through Treasury Direct. You go strictly through here and get you what? 6.8 value. And these bonds ain't, exceptionally, we ain't talking about 20-year paper, 10-year paper, 30-year paper. We talking about 6 months to a year. That would be like you got your money at the beginning of the year, you filed your taxes, you put some money in the bank. I'm gonna sit on this. This is my money I'm sitting on for the rest, at least into beginning of next year. I want to have this money safe. Well, guess what? If it's not in the money market account trying to get it that way, here it is on the I bonds. This is yielding you about around 6. Now, again, that looks good on around about 10 racks. It looks good on 100 rack. It looked good on $1 million. It looked good on 10 million. It looked good on 100 million. Again, now we're talking about institutional type money, right? Would they rather fight that way they're getting in this crazy equity market at this point, knowing what it is, or would they say, this 6% plus year here, this 5% plus year here don't look that bad all of a sudden. And it's pretty much guaranteed free money. Backed by the Treasury. So there is another alternative now. And beyond that, there's a flight to safety in a way where quality safety, they say, where you think about the value of the cycle. If it's not, again, if the cycle is not complete in terms of what we get, because here's the next question. I'm gonna ask you guys, what's going on over Sun? I see you popped in the building. If I was to ask you guys right now,
Hey, peace.
What's going on over Peace, Power, Profit to you? Do y'all guys think that we're done in terms of the lows at this point? I mean, we already went through it. We planned for around about $330. We got close.
Not at all.
You say no over Sunny?
Yeah, no, we're not even close.
You think we're going lower?
Of course.
How low? To break the lows, touch the lows, bounce the lows, bounce at the
Um,
low?
it depends as if we just talking about the S&P or we talking
Yeah,
about as far as overall companies.
the S&P as a whole, and we just use that as a blanket case. We always do.
Yeah. Well, yeah, I see the S&P getting to about 360. So when you average it out, you still see like most of your blue chip companies, they're still making a way some type of way to keep up with their last earnings. Even if they miss, they only miss by a little bit. So when you look at that, the only thing that's really breaking down is the inflation that they're trying to do is still kind of high, but what's breaking down is these banks, the credit, different fall positions, because all these different banks that's breaking down, they're not breaking down for the same reasons, but it's on the page of they're getting looked at now because once one bank falls, everybody starts getting looked at. So it makes a big difference. And with that being said, it's a lot of companies that's not going to be able to borrow from the banks like they used to be able to make up for whatever their losses is. So this is why I say a lot of it's going to end up going down to about 360 or around that size.
Right. And very good point. Very good point. And this is, again, we talk about because that's going to be the word of, in my opinion, for the next 3 months to maybe the next 6 months, right? It's the contagion. It's the contagion effect, right? Y'all been seeing all the contagion. It's the contagion effect, right? It's contagious. This aspect of, again, one gets exposed, now the rest, start trying to put on clothes, right? But it's too late. They can't run to the to the power store fast enough. Why? Because they ain't got, i.e., money or the vehicle to get them there. They thinned out at this point, right? This is the adverse effect to a lot of that. Again, overzealous mindset that you got coming out of Wall Street. They always think they can fake it till they make it. Why? Because they've been able to do that for so long off the back of the Fed. It's the Feds is the big brothers of the financial markets. They've literally, from a quasi perspective, overturned the value of free capital markets, right? And now it's become a game of what? The Feds are the comptroller of what? Equity markets, which is far, by all intents and purposes, the most illogical aspect of all times, if you say this is a free market capitalism, but yet you have a government control mechanism to control the market, that in itself tells you that they're picking winners and losers, because it takes away the ability of the small company, the small cap company, to really benefit the way that they could, given the fact that they can compete with a bigger company like an Apple, right? The fact that there's a lot of small companies that kept taking Apple to the court for still infringing on their patents and their different technology. The fact that they couldn't get a chance to leg up the way they want to naturally is because the feds kept pumping so much money and made it so much easier for Apple to go to the lending desk, borrow money against what they already got, and they can continue to pounding the small companies, beating them down. That in itself crushed free market capitalism, because they kept borrowing rates so low for so long. Now, it still helped the small companies too, but it still didn't give them a healthy appetite to compete, organically, as I like to say, based upon the fact that they made it so easy for the bigger conglomerate companies to eat up all the businesses of the small companies did, right? You had to be a standout to be able to do so, i.e. TikTok. TikTok literally took down not only Facebook, they took down Google, Snapchat, and anybody, Pinterest. They took down all four of them in under around about I would say about 15, 18 months. Make it make sense. A company out of nowhere took down the four biggest social media companies on the planet in around about 16, 18 months. That's how capitalism is supposed to work. But guess what? Now they finna punish TikTok right now. They finna ban it. No more than what it is. We know why they really ban them. We ain't stupid. It's political. It's political. They hate on their business model because it took down the so-called the biggest, American, darlings companies. And here it is, these companies were slimy. I mean, i.e. Facebook. How slimy is Facebook? Super slimy.
What's kind of crazy too is they actually use other social media platforms that was their competition as as a way to market and advertise what they had better on their platforms for other people to get on it. And since they were up and coming company at the time, it was on the page of where it was too late before everybody wanted to put a stop to it, because it grew so fast, and they had already had the same technology that they were using as far as the platforms to advertise it. They had that same technology, and they had a little better idea of it when it came to the advertisements. And so that's what kind of killed them for a little bit.
Well, they took a lot of advertising off of Facebook. Remember, advertising in Facebook started to plummet?
Yeah, on the advertisement on Facebook, the advertisement on Google, on YouTube,
YouTube,
the advertisement on Instagram. Yeah.
The ideal of the shorts became the new hustle. They understand the attention spans of what? Remember, they used to say back in the day, attention spans used to be less than 60 seconds. Then it went down to 30 seconds. Now it's down to what? How long is a short clip on TikTok? How long is a short clip on Facebook on YouTube right now? Them short clips are what?
60 seconds, I think.
Some are around about 60 seconds, right? That's the more longer versions, though, right? But typical, most shorts are around about what? Aren't they like about 20 seconds, something like that? 20 seconds, they get in, do their little thing, and then they out, right? They're capitalizing on, and then guess what? They load up a lot of advertisement in that short period of time, right? I mean, the advertising gets attached to it. Now, some of them are a little longer than others, but I'm just saying they hit them quick, right? They hit you quick, they hit you fast, and then they out of there, right? Again, some of them are a little longer than others. Some of them can go out there long length of time. But now you're getting the whole catalog of, or I should say catalog. You're getting a whole breakdown of, of information or whatever in that little bit of time, and boom, right? Boom. So now again, Facebook, or I should say even Google, they actually sent out a memo to, I guess, so-called quote unquote content creators, that they're now pushing the campaign that you need to be more focused on doing shorts than doing long videos now, meaning that Google AdSense advertisement, criteria is more relegated to you doing shorts now than doing long videos more than 2-3 hours. Advertising more, they're more excited to work with you if you're going to do shorts over doing long videos now. Because essentially it's going back to the days of commercials, right? Essentially, commercials used to be 2 minutes long. Remember old school? Back in the day, you get 2-minute commercials inside of a syndicated, TV session on regular TV. 2 minutes, they come in, get you for 2 minutes, and then they out, right? They pay for that space and move on back to the show. Now it's 30 seconds, 60 seconds. They got you, boom, bada bing, bada bong.
Yep.
So it's all set up to kind of set the new wave of how they're gonna how they working with the value. Number one, the consumer on the other end. Again, because to credit even to Instagram, because Instagram is really where Zuckerberg really surviving now. To be honest, Instagram floating them right now because it definitely ain't parent company Facebook, right? It's Instagram that's moving the dollar for Facebook now, or Meta, excuse me, whatever. So the same would be if you think about how YouTube lost a lot of money when interest rates began to go up. Things like that began to be a problem. They couldn't pay advertisers what they used to pay. I mean, I was getting a nice little piece of chain. They were sending me a couple of nice little pieces of chain. I get around about $300 a month, $400 a month, just off of the videos I have in perpetuity. And then the advertisement rate went down. Boom. And then they banned my channel, right? Remember all that goofiness, right? I say I ain't finna fight this because I don't care about this like that, So whatever. But as soon as I got my ability to be monetized back again, they had changed the entire content creator monetary package at this point. Because of the fact that TikTok blew up the game, the fact that advertisement went elsewhere at the point where these companies didn't, they shot their own self in the foot too. I would say that because they went, remember this whole ideal of, they overtook awakening from us and made it a woke campaign to slander what we know what they were trying to do, but we know why they was doing it. But what it did, the other companies jumped on board of that, and it also hurt a lot of their money, i.e. Netflix. Again, Google, remember they were kind of banning everybody for saying stuff about the jab and the vax. Turned out we were right, but we ain't going to even throw it in their face. And they ran people off the platform because they were just trying to speak on it, what they was feeling and seeing and experiencing. Go ahead. Somebody saying something?
Nah, I wasn't saying nothing.
Okay.
I accidentally pressed the mic because I definitely was gonna throw it in their face.
Yeah, because y'all know we went through this stuff. I was telling you before you came on early, over. Y'all know we went through this stuff. We broke all that stuff down way back in basically in the springtime of 2020, and people looked just like we was crazy. They called us all kind of stuff like y'all pseudo and this, that, and third, and okay. We were like, oh, okay. And we ain't even throwing it in their face right now. We could, but we not.
Hey, but it's crazy because you've been gone for a minute, but I started realizing what you were saying like a couple years ago of how the market will tell you what's going on in the real world. Like if it's not going on in the market, a lot of times it's just hype in the real world when they be saying certain things or certain things go down. But if it happens in the market, it's definitely going down in the real world.
And that means that you got it first before it even hit Main Street. That's the crazy thing about it. We get it in advance because we're at that R&D aspect. We're at the beginning edge aspect of it when the quants and the data managers or the statisticians, all the people that work for these companies, like i.e. ARK Investment or whomever, Moody's and JP Morgan, their team and Goldman, they relinquish information down through shareholders, right? Either it be breaking news or just through the shareholder. We take that information and we apply it or to our lives if we can, if we early, so you can plan for what's coming down the pipe. Average Main Street person, they getting it late. They feel the effect of it after we've had time to plan for it in advance. See how that works? You already in the space that's giving you free hand, at least when it comes to these kind of aspects of macroeconomics. Not just in terms of finances, but also what real world issues, health, wellness, right? The things that really move the market, right? We talking about products and services, right? Either services, y'all know that's a broad spectrum, right? Health, insurance, a lot of things that come with service industry, right? But we're seeing everything in that umbrella firsthand. So you can make more again, better decisions, equitable decisions with that information, that data. By the time the guys down the road get it, they dealing with bad information. The fact that we knew Pfizer was going to blow up at some point, when we began to connect the dots and say, okay, oh no, all the people on the payroll, we were talking about that stuff back then. Heck, the old FDA, the head of the old CDC at that time, what that guy named Scott, whatever his name was, remember they kept bringing him out all the time on CNBC. This fool was sitting on the board of Pfizer. Of course, he was pushing that vax trash, and then it turned out they had colluded with the government behind the scene, the same way we saw it now when they picking winners and losing, what they did with Intel, to concoct this whole idea that it was this and it was that, it was this. They brushed under stuff that happened with Wuhan under the rug, and they came up with this whole cockamamie idea that Pfizer and Moderna was going to be the main beneficiaries of this vax war, because they had better insight on dealing with the virus firsthand. Well, we know why now. Why? Because the NIH with Dr. Fauci were cutting checks. They were cutting checks to that lab in Wuhan for essentially gain of function research. And y'all know what gain of function research is, right? This ain't the conversation.
Yeah, that was the main thing I kept putting out there, was that gain of function. Everybody was like, what the hell is gain of function?
What is
I was
gain
like,
of
man.
function? And again, I ain't gonna throw our brothers on the bus, but them same brothers that went on and took on that debate against them other folks, them doctors or the other people up in New York, y'all know what I'm talking about. And they was pushing for the what? For the vax. Turned out that them people had already came out and told you that, number one, natural immunity was better. I'm just using base case stuff. I ain't going deep in the weeds. I'll say that comes in for another day, because we got to have it. And number two, that the exposure value of it was more than what they made it out to be. We already knew the death rate was already at what? We're talking about point percentage value. They saying 99.3% people, it had 99.6, a 99.3 survival rate value. That's up there with the flu. Make it make sense. It was more contagious, yes, granted, I get it. But it still had a 99.6, 99.3 survival rate. Meaning your natural immunity given you was hydrated properly, got some good vitamins in your body, got some sunlight from vitamin D, you'll be okay. You have a nasty little virus, but they complicated it by making it more than what it was, so it panicked people. Their stress levels went up. People try to act like that was crazy to say that. No, you can affect your immune system by your stress level. That would cause spikes in and different white blood cells and things that nature kind of move around your body, cause you to have this kind of imbalance in terms of your immune system. So if you catch it and you already stressed and whatever, undernourished, it can get nasty. I'll leave that alone. Let me stop. Let me just be quiet. We'll talk about it later, man. But all I'm gonna say is they were colluding. Albert Bourla, the CEO of Pfizer, they were colluding with the government to push that propaganda that you was damned if you did not go the route of getting those jabs and the boosters and everything else. And it turned out that was not true. Because we would have known that if it was manipulated from the value of a SARS-CoV-2 and its base case, it was no more than what we knew it to be, just a radical value of another respiratory illness. Anyway, we'll talk about it again on another session, right? Right. But nonetheless, those companies now have all but given back their money.
I think it's tomorrow.
Right?
So I'll have to get off work.
Hey, hold on right quick.
Get ready to go here. I got some moves to
I
handle here.
just want to part stuff. I know.
Hey, Sonny.
Hey, oh my
Hey,
bad.
yeah.
Oh yeah, the mic on my bad. Yep. Here's Moderna. A lot of us were selling up here around what 400 area, 395, 350, 400. A lot of us were selling our stocks up here. We got the receipts proof. Right? I like to keep saying that. Here it is now. $1.50. That ship didn't sell. They got one thing in their portfolio, because y'all know I was pushing for Moderna at the time. I just did the research based upon the stock. I already knew, given what it was, I say, if there is a base case, this is the deal. That's up to you to make that decision. But as an investor, I see this. Right? But it was a whole lot of things going on that you could not bank on this being sustainable for a myriad of reasons. Because this was a seasonal value. When the more the data came out, it became apparent that you could not survive thinking that this was going to be the new, this was going to be around, because they kept saying, "Oh, it's going to be around for years to come." Remember, they kept pushing that old fear tactic, that FUD, right? Fauci and all of them. Oh, this is going to be around for years, and then you got to worry about the mutation, right? Bill Gates, all them dump their stocks up near the top.
Yeah, everybody said that this is going to be around like the flu,
and it was going to be just as bad, right? Meaning worse. Turns out, Pfizer, same scenario. Turned out they got exposed. I ain't get a chance. We're gonna go over that because we got the videos with all that. Remember the scientist, the black scientist got exposed. Y'all, I'm sure y'all saw the video like I did too, right? He pretty much came out and blew the whistle and said, we pretty much put out the fear campaign, and it got financed, and the government backed it, and the vaccine we pushed was not what it was. But we had to go forward with it anyway. I'm just paraphrasing. We had to go forward with it anyway, and we benefited from it.
Yeah, they had the scientist that was exposing the situation before Fauci had went to court, and so that's what I was trying to bring to everybody when it came to gain of function.
Yep, all of them. Again, Rand Paul he was on the back of Fauci neck the whole time anyway. Jim Jordan, all them guys, man, they beat the brakes off Fauci. Every chance they got a chance, they was on his neck. And then again, that video that came from that Pfizer scientist, though, that was a nail in the coffin. That exonerated Dr. Robert Malone. That exonerated Dr. What was her name? The one lady that they kicked out the NIH that exposed Dr. Fauci for the drama queen that he was. They kicked her out. She was one of the lead scientists. They kicked her out. I forgot her name to come to me, but she did that whole video. Remember that whole expo on the video? I'll pull that stuff up now because now that I can, right? I ain't got to worry about keeping it under wraps now. I'm gonna put all this stuff back up. I'm gonna run them videos. I'm gonna run them videos, boy. Ooh, woo. And it was just all what we knew it to be at the end of the day. But nonetheless, again, it hurt a lot of people for a lot of reasons. That it's just criminal, which it is. China on the hook. They're not off the hook. Trump was right. It was the China virus. I'm gonna give him credit what credit is due, right? He called it what it was, and they went on him for being xenophobic. Just because he called it basically where the epicenter where it came from. Right? This is the nature of, again, when we talked about the value where they want you to trust them, but they never gave you no indication that you can trust these people. It's always been for profit. All these people got kickbacks and checks from Pfizer. All these people got kickbacks and checks from Moderna. And it was planned to be that way because they picked the winners. They picked the winners that they wanted to win from this because they had interconnected webs linked to the NIH, the FDA, the CDC, all the other government agencies and board, and they benefited off those off the degradation of people suffering. You couldn't make this stuff up. But again, we're going to talk about it again on another video. I don't want to use this one for it. But nonetheless, this is the nature of what you're dealing with. A lot of things going on. Again, you have to be comfortable being uncomfortable with information if you want to be successful in any aspect of life. You need to have a balanced approach to getting all the information from both sides. Never have an implicit bias. And you have to be very open-minded. As hard as it is sometimes when people obviously doing things to be very malicious and felonious, in a lot of ways, especially when it comes to government. But even these companies the same way. That's why we say we rent, we lease, we don't own. We rent, we lease, we do not own. We're not going to get emotions attached to no company, no CEO, none of that, no C-suite, none of that. The worst thing you can do as an investor is take the approach where you're going to be, cheerleading and beating the drum for any of these people that that are out here doing a lot of nefarious things or very questionable things, and you want to align yourself with that. The same way I don't align myself with no political party. I never will, because there's just two wings on the same buzzer, right? The fact that they don't even want to think about, bringing on other parties to neutralize this goofiness that you're getting in Washington that's causing the standstill where you can't be protected, but they already run to the bank and call these big banks and big corporations. That in itself is spitting in your face. And they ain't got but so long they can keep doing that before people bring out them pitchforks. And that's just the facts. But I'll leave that alone because I don't want to stir no horny nest up. But y'all get it, But again, we ain't been on this just for for kicks and giggles. We've been doing this stuff to try to really expand our vision, our knowledge bank, so we can be very more, so we can be a lot more equipped to deal with what we're seeing in real time. That's what this is for. That's what these little forums are for. No more than that. We're just average day folks out here trying to make a difference. So it matters. So what's going on, Oba Marquise? I see you that popped in the building, man. Shout out to you, Oba. Peace, power, and profit. Been a minute.
What's going on, Oba, man? Peace to the fam. Peace to the fam.
Peace, family. Been a minute, man. How's everything going, man? How's everything been?
Everything's been good. Everything's been good, Working as usual. I've been doing some learning the program C++, man. So I've really been in the lab,
nice.
Going in on that.
Nice, right? Expanding your knowledge bank again. You always been on the technical side of things, of course. You know how that parlays, especially to the to the cryptocurrency space as a whole. Of course, a lot of what you got in terms of knowledge, what you brought to a lot of us as well. Come off the back of that too. But the next level now, you're going into that. On the algorithm side of things, right? Just the interworkings of what that looks like, especially the blockchain. The ideal of where where that's going now that you're starting to get, a front row seat of what's happening with the banking sector, right? They're just making the case why crypto, is what it is, right? Or why it was birthed, right? Out of necessity. And so now a lot of the programs that are out there now, dealing with what happened with the FTX scandal and how it's going to really improve actually the blockchain, because it's going to improve the space. You have to, as they say, weed out the bad actors. A lot of them getting exposed, as they should have. Once that happens and you sweep all that stuff out, then you kind of get a chance to look at the inner workings again and say, how can we improve this so we don't get caught like that again, right? We can sniff out the bad actors. That's going to make it even more soundproof. The only element left in terms of that, of course, we know it to be is just a regulation. If that happens, we can get a good flow underneath the space. Now, is it still subjected to the to the SPY? Yes, it still has to deal with that, even though we see that there's some divergence, but it's not still enough quite yet, because we know institution money now has to reallocate what they feel to be safe investments in that kind of space now, because they don't feel so comfortable, and they don't feel so comfortable now what happens with the banks. Now they still feel good about it because they always gonna bet on America, right? That's the hustle, right? You got to bet on America even when the America show you that it's it's scamming and shamming, right? But we're talking about allocation of portfolio value. But before they used to talk about it being 2-3%, 5% of your portfolio value. You need to go in the crypto space. After all this stuff bottom out, all this foolishness bottoms out in this cycle here, I think that number is going to increase, especially if they kick in the regulations as we know it to be. So something to look out for. But yeah, you got any news on that space recently, man? I know you still keep an ear to the ground every now and then. What are you seeing out there?
In the crypto space, just like you said, it's trying to find its footing. I think that the regulation is necessary, and I think a lot of people kind of got lost in the sauce in terms of just wanting to make money off this cryptocurrency, and everybody's just hoping it just keeps going up and keeps going up. But if you came in this game early and really understood what the goals were, you want it to be stable, so that it can be used as a means, of transactions and store of, value and all those types of things. You want it to be regulated and you want it to stabilize. So, just the more time that goes past and the more issues that it runs into and that get fixed, like you said, the better is looking, and we need these alternatives. We need more diversity, So like I'm trying to learn the technology side of things so I can be more creative and create solutions as well.
Yeah, that's where it's at. The new the new wave of, at least on that side, because again, it's all relative. We know it to be the case. Right, the same way this the whole new Chat GBT scenario came about, because I didn't get a chance to even go in that with you guys, but we'll be back on again. We'll talk about a lot of stuff. Been a minute, so we all didn't talk and kicked it anyway. But a lot of things have happened since then. But a lot of these stuff you guys already been privy to because you already know how to track this stuff. Ain't nothing new. It's nothing that I can tell you that you already don't know. Again, I'm not the the controller of information data. You guys are smarter than me in a lot of ways and dealing with this stuff and turning over the information. And the great thing about, again, utilizing, as we like to say, the think tank scenario in this regard, we can come all together and speak about it. It just kind of really plugs in a lot of holes where a lot of us may be looking at things a certain way or looking at it, whatever. You kind of want that feedback from your peers or whatever. It helps in that regard because we know that there's opportunity out there in a lot of different ways, even during down cycles, right? There's opportunities in markets during down cycles, right? And this is just one that's very relevant for the value that, the way that it has brought the market down, from one catastrophe to the next, right? But a lot of it, this stuff is based upon, again, what we saw in terms of how, squirrely the markets got because they utilized the value of how COVID, put the world, took the world to a place it had been in a long time. And the way that they thought they was going to capitalize on it, at the extent that they did, of course, they got greedy, but they were very mismanaged in terms of how they even looked at it, right? If they could have played their cards right, it would have really been a good scenario where we could have went right out of that cycle into another strong cycle of growth and kept the wheels turning. But they got too greedy, and they just blew the whole spot up. And now the dominoes affected the banks going down, and everything else got crashing, and everybody getting exposed, and the crypto, all this. They just messed it up for everybody. But that's typically greed begets greed because we know people are not comfortable being able to share wealth who are greedy. They have a hard time sharing wealth, even though they got more than they need, but it's something in them that makes it hard for them to share, equitably the value of the wealth creation that really comes at the back of the taxpayers. And it's fine. So when they crashing and burning, I'm drinking tea. I'm sipping tea. I'm watching them all unravel. I'm watching these nations implode. Y'all saw how they failed sanctioning Junebug over there, Comrade Junebug over there. I'm speaking in code, but y'all get what I'm saying. They tried to sanction Comrade Junebug, and Junebug smiling right now all the way to the bank. He laughing because he watching they nations implode one after the next. Like you couldn't make this stuff up. That's what you call a boomerang dagger, right? Or something like that. They say over there in the sport. This is a boomerang dagger. They boomerang daggered themselves, and it's ugly watching everybody scrambling like what happened, but they know what happened. But anyway, I'll leave it at that. Again, nice little conversation coming on, speaking with the fam, man. Again, I know it's been a little minute, kind of going through this in a way where I want us, you guys to see that everything that we've already kind of planned for, we hear. Yeah, we can update here and there, but I will say, man. Again, you guys some of the most brightest and very equitable ideas right in your own circles. You got to utilize it. The market ain't showing you no more that you wasn't already prepared for in a lot of ways because it ain't hard to see the domino effect, right? We know who the archetypes, the archetype value, what's going on here. We know that numero uno, of course, central bank, and then it's like doing an investigation. You kind of on your wall, you put your little tag on the wall, like. Right here is the central bank, right? Down here is so-and-so. Over here is so-and-so, right? And you just map it out like these are the players, right? Just like an old mob boss crime scene, right? You just map it all out, break it down, then you say, okay, this is where I need to be focused on. All right, if tech is messed up because of this, what does healthcare look like? If healthcare messed up because of this, what does the commodities look like? If commodities are strong for this reason, okay, let me look at that, right? Again, that's all it is, guys. Connect those dots. All right, so I'll leave it at that. So I'm going to get ready to get off here, guys. I got some things to take care of here. It's been a pleasure coming back and speaking before my peers, you guys on Ubuntu. As I always like to say, I'm old school. Again, I don't have to change it up. I ain't got to get all crafty and slick with some new words. My stuff is always the same. I keep it very simple. Peace, power, profit, and Ubuntu, because that's what it takes to get through this stuff. The world is much simpler than we try to, make it out to be. It ain't no more than, again, being able to follow the trails of policy and money, right? And when they get exposed, you know exactly what to do, right? So no secret there, right? So shout out to you all again. Thank you all for tuning in. I'm gonna get the channel going a little bit, more than average lately, than I got going on. Got a little different schedule scenario now with the little guy. A lot of things going on with him. So again, really enjoying the value of fatherhood in this regard. And it's just a process, man. Y'all know how this stuff go, man. You got things you got to do, and it just life gives you some opportunity to take care of, and you handle it. Right. So enjoying that aspect. But you guys are always close by in that regard. The information is there, nothing new under the sun. Let's just act upon it, right? So I look forward to being, coming on again, catch you guys during the days a little bit too. We kind of, kick it. Because I know, the bicycle getting ready to come around. That's why I've been saving that bacon for a reason. But the bicycle come around, right? But when it comes, y'all know I'm gonna be on here going. We're gonna have a stock guard party, kind of like. But again, we're gonna take that little tight spread and we're gonna go all in.
Man, I just talked to that brother, man. He started his own little thing. I was like, that's what's up.
Let's go. I'm already there. Right?
Yeah.
Them guys already been there. Bullet Bear, all them guys, man, they already been there. They've been ready. Again, you know how stuff go. You got to go through this. You got to go through. All these different forms that are out there. Cause y'all know we came through all that stuff. We went through Ross Cameron, Trading War. We went through the Tim Sykes, right? We went through everybody. We went through the Ricky Gutierrez stuff. We came through all the way back then, right?
Harmonic
Bull
patterns
versus,
and all kind of stuff.
Bull versus Bell, right? We went through everybody.
Man, that's crazy. Crazy how time fly, man.
ICC, right? Your boys them over there. What the name? ICT.
Michael Hudson.
I in person didn't go to him. A lot of you guys did as well, but I mean, he been sound, right? We went through the Oliver. What his name? Vasquez. What his name? Oliver. Y'all know what I'm talking about.
Anton Crib.
The Anton Crib, right?
Yeah.
We know who the real from the fake. At this point, ain't no secret here, right? So now it's about taking information, guys, and being able to sift through all that stuff. And again, find, as they say, spit the meat. Eat the meat, spit the bones, right? This is what this is about, right? So when you find them brothers like that, like they've been ready. They got knowledge to share. Of course, they all of them. I mean, we can go down the list. We know a lot of people came through a lot of those circles too. Up and down that they got information to share. Now you just in a better perspective where you know how to read through the lines and see exactly what they have to offer, whether it's worthy or not. You see what I'm saying? Because you already been there, you already seen it, you've already heard it. So we ain't selling nothing over here, but the same thing that everybody else want: opportunity. And it ain't hard to go out there and sift through this stuff and figure out where the chips fall. They already kind of exposing themselves, as they say, it's a boomerang dagger. You just sit back and watch and like, okay, that one there got blew up. This one here blowing up. I'm right. I know where to go. Right? I know how to maneuver. So shout out to him, man. I need to hit him up, shoot him a DM, man, and see what's going on with him too. So hope we can get him on. I told him that we were gonna do a show with him a while back. I never got around to do it. But also, I did link with our brother though over Christmas before I do get out of here. I'm gonna try to get him on. You know what I'm talking about too. Curtis.
Oh snap! I'm
gonna try to get him on. I linked with him. I shot him a message. He replied back, but I still I want to try to get him on though. A lot of you guys probably already know we did the break down with our brother a while back. Curtis Wall Street Carroll, right? The guy that was locked up he was locked up in Quentin.
Wow, really?
Yeah,
he out. He out now. I don't know if y'all know that now, but he out. He got his Instagram page. He be on Instagram a lot. That's
I gotta check him out.
Instagram. But
he been teaching. He been teaching.
He been teaching too. He been going in on AMC, a lot of the bank stuff. He been talking on there. A lot of people don't know. They know him from TED Talk, but a lot of people not to go out of mind. But he home, and he got knowledge to share. He got something to share now, right? So I'm gonna try to get him on, man, and we could do a nice little breakdown. Give him your backstory of his story. Give us a present. Give us a past, present, and future. That's how I want to do. Anytime we get an interview going forward, that's how we're gonna break it down. We're gonna go do a past, a present, and a future, because that's the best way to kind of analog, put a nice little analog value together, right? So I'm also bring Dr. D back too, because I definitely need to get that sister on again. She dropped a book.
She's very thorough.
Yep, she trained. She dropped some Forex financial flashcards recently. So she still making moves, right? That's something about that life. So we're gonna try to get her back on again, do something with her, and just kind of go through some of those same circles. And definitely we need to get Stock God on, right? We definitely need to get him on for quite a while anyway. So again, just want to sit out some of them old faces that y'all are familiar with, right? So So that's
Over.
mhm.
I did want to see if you can hop on one day and share some information that you got on that the jet token conversion with that Oxac company.
Yeah, they got the spec thing going now. They on the move,
Yeah,
and
yeah.
yeah, I've been
I
looking
was
at it. I'm
on.
sure you have too, right? I'm watching it, because we watch the share value being kind of stabilized and this, that, the third. I'm
Yeah,
at it from a place where I want to make sure that they got. I hope they don't do that crazy, right? We don't need them to jump out the window. We need them to kind of go dress, right?
right.
Because we saw what
Hmm.
happened with a lot of these SPAC companies, right? We know the SPAC companies are under a lot of pressure, right?
Yep.
A lot of reason that
Hmm.
they got blown up because they got overzealous like everybody else. We know Shamat went out there, he jumped out the window a few times, right? He
Yep. So yeah.
over pumped and didn't deliver a lot with a lot of some of the ones he was doing. So they
Yep.
watched, but yeah, and we talking about different industries, of course, granted, but we know niche spaces are very hard now because of interest rates. So the same way I look at Jet Token, the first thing what they're gonna do over, they're gonna look at that to what? They're gonna look at Virgin Mobile or Virgin
Yep.
Space. They're gonna look at space. What happened with
Yep.
that, right? They're gonna look at the other one. It was another one that they put out. It was a space ETF under that Virgin put out. But even though that ain't
Hmm.
space, but we still talking about commercial jet traveling, right? Which is still based
Yeah.
on the transportation system. Now, the transportation sector been doing good lately. Why? Because what? People are still sitting on a lot of money. They couldn't wait to travel based on post COVID, right? They've been getting it,
Hmm.
right. To be honest, people still been traveling. We've been seeing that in the service sector because it's been showing in the numbers. We saw that actually
Hmm.
on the last BLSI report. It showed that
Yep.
travel is still what kicking butt, taking names.
Still
It's
booming.
keeping inflation up,
Yep.
right?
Consumers.
So,
Consumers still strong.
right, what I'm saying in a lot of ways. Now it's
Yeah.
going to degrade. It's at about the end
Oh
of that
yeah.
quarter now, though. They're about there now.
Carnival is still up too.
Yeah, even with the cruises, right? And this is around the season for them. So, they finna get a last little bang, and then probably people gonna start reassessing based upon the recessionary value, right? So those but we talking about service industry, right? Services. That's why the Fed's in trouble, right? So yeah, we'll let them play this game of trying to pump these. That's the latest hustle right now. It's the bank hustle. I'm telling you the two latest hustles. I'm gonna get out here. It's the bank hustles, right? They crash because they got exposed. Then somebody come in and try to buy them up. Then people try to buy the deal. The second hustle is the layoffs. You lay off, your stock get a bang the next day. Every time
Hmm.
Facebook do a layoff, the stock go up 5, 6, 7%. That's a lot when now you up above near 200 now, right? They using
Yep.
that, and it's obvious we know why they're doing it, right? This is crooks just going to the next hunting well, and they in their mind, right? Never mind the fact that people lose income and this, that, and the third. Well, these people, white collar executives, whatever, right? There's other people that down the line too. But I will say this here. This is why they're gonna be in trouble, meaning the feds, where they are being where there is being a lot of tech layoffs, and they're saying wait till all those tech layoffs really hit the market. That's what they keep saying. They've been saying that for the last 2.5, 3 months, and it ain't really showing up. I'm gonna tell you why. Because y'all know as well as I know, y'all follow the data like I do. We look for what the little people doing. Service industry jobs, those same hotel workers we talk about, and those people that work at those little service jobs we were talking about, those people are resilient because you can get 2 or 3 jobs in them areas, right? And the BLS don't know how to count stuff right anyway, and it's showing that those numbers are still strong. That's why the service industry is the biggest issue that the Fed's having to deal with now, and it ain't gonna go away because those jobs are still plentiful, regardless of the fact they're trying to cut jobs. But again, white collar jobs, those jobs are far and few between in the grand scheme of things. They may lay off 10,000 at Facebook, another 15,000 at Amazon, but guess what? Another 100,000, 50,000 to 100,000 when they got a job at the local, hotel down the street, or some restaurant, whatever, right? See, look, I just got my popcorn. I got my popcorn. I'm just sipping tea and I'm just watching the carnage, right? So, again, and I'm gonna throw one more other little thing out real quick. I know brother Jared. What's going on, brother Gerald? Peace, power, profit to you, man.
Hey, good brother, can you hear me?
Yeah, I can hear you. You sound good.
Oh, okay. Yeah, I'm riding in my vehicle, so I didn't know if it was picking up or not.
No,
But
you
hey,
good.
I want to see if I can catch you before you got off because conversations be far and in between. But I had a couple questions, but I'll wait till you go ahead and throw your other nugget out there.
No, you will. I was just going to say some of the assets to look at. I'm sure y'all already been kind of watching what to look for at this point. You don't need me to tell you what what's popping and not. Just by watching market and keep you out in the futures, of course. Some of these indexes have been really interesting for a lot of reasons. I will say this just on the way out the door. I've been trading a lot of me personally. I've been hitting the TQ, T triple Qs and the SQs up a lot. Why? Because they tried to put a rebound, a foot back on these tech sector recently, right? So those are some of the assets I've been hitting. That's a triple leverage instrument, right? So that means you get more bang for your buck. Hold up, let me show you. I'll show you real quick on this one here. This is one of them. I've been hitting.
The 2 year been getting smoked.
Yeah, some of these. So I've been hitting either you got the TQQs or the SQs, the inverse of that. All right, I've been tearing this joke up here. I wrote it down. Well, I wrote it recently here, from 20, right, all the way up to like 25, right? Those options be very cheap too. I ain't telling you what to do. This is not financial advice, but as you see, I got my rounded bottom here. I got my line, my resistance line. We crossed above, we closed above it, barely, but we barely above it. So this is interesting. We may make a run at 27, but these just the tech set trying to rebound a little bit off the back of what. This little latest trade that the Fed's going to pause and pivot. This is not a long-term trade, number one, because not the instrument for that. This is a triple leverage instrument. It's just a volatility indicator value for a lot of the tech sector in a lot of ways. If you look at it from a base case, the same would be the inverse for the SQQs, right? Some people been trading, a lot of other stuff in terms of the VIX and the UVXY, XVXY, whatever, because we know that a lot of volatility trades are opening up again. So that's all it is. Just another volatility meter for some of those same sectors like tech, whatever, et cetera, et cetera. But I've been tearing this one up like crazy lately. And again, a lot of these contracts are dirt cheap, so you can buy a lot of them. So I've been buying 3, 4, 5 of them, sometimes 2 of them here, whatever. But just something I've been riding lately. If they're gonna pump, again, if NVIDIA is gonna stay up the way it's doing, because y'all know the video up there in the nosebleed section still, it's riding on, it's doing the same thing Tesla did. Now, convince me how NVIDIA is the future. Right? Couldn't make this stuff up. Look, I mean, this is NVIDIA off that box. This is the kill box I had way back here. I mapped this out a long time ago with some client. We were doing stuff breakdown, and we were kind of mapping out the bottom in terms of that. And being around this, the gap fill to 142, that being the new backstop, we cleared that level here. We finally cleared that level, and then they just ran it from 140 literally to where it's at now, 257. And this is in the face where we know semiconductors are being very stressed out anyway. Still, it still ain't that. Supply side ain't fixed, but somehow they put the video on their back under this Chat GPT hustle. Again, that's why I said these are new hustles. The Chat GPT hustle, right? Right.
Prompt engineering. That's what they call it in that prompt
Yeah,
engineering.
you think it rose like that because of the fundamentals?
Now this clearly ain't fundamentals. This is clearly not fundamentals.
I'm talking about what the as far as like the hype with, because if you look in between on the jumps, is when they had the heights with the Chat GPT, and then from there you had the hype with the semiconductors as far as making the chips, because once TSM had basically went down with the last production that they had, it made it to where AMD and NVIDIA took hold and went up based on their information.
Yeah, that's that whole the CHIPS Act too, right? It's a combination of that. It's that and the ChatGPT, and we know it's a rising tide to lift all boats, right? So we know if NVIDIA is pumping for any extraordinary, anomaly value for what it is, even though we know it's not purely fundamental, because they just came out in their earnings and showed you they will suck. They sucked. They came out pretty much said that the earnings told you everything. So that means this is void of fundamentals at this point. It's the ideal of thinking that they're early in this cycle of this whole Chat GPT, which is just a phase. But what it's doing, they're picking winners and losers. Like we said, this is how Wall Street floats certain sectors by finding that some of the bigger players in the space, or what they call best in breed, second best in breed, and a rising tide lift all boat. It kicks the can down the road and saves everybody else indiscretionally. Make sense? Because I'm a bigger proponent of AMD. I have my biases for AMD, not implicit, but I was very clear. I said I'm gonna buy AMD around low 70s, mid 60s. I make that very clear, and I was very adamant about that. Around that area, that's a good area for AMD. Granted, even the pullbacks. Since then, AMD been playing that area like a boss, right? That puts it at around, this point here, this gap fill area around about 64, right off the base around 55. That's a good area for AMD, right? Midline level for me was around by 85. They crossed that. I ain't even still my line over there yet. And ever since, it's pumping on the back of what? NVIDIA pumping. AMD ain't done nothing special because, again, I'm following organically. We still had the good, emanated we did recently with the one company. I forget what's the company called? Periton, something like that. I forgot the name of it. Anyway, it's overbought, and it just, this is ludicrous, right? But again, a lot of this still got to rebalance, and it's fine. Again, I love it as a shareholder, but I ain't add money to it. I added money down 64 cents. I had recurring investments going into this stuff. Sometimes, bi-weekly. Sometimes I added more when it was down anyway. But nonetheless, all this stuff is going to pull back at some point because we know it's overbought. It's just a way to kind of help the tech sector because guess who else? While this is going up like this and booming, guess what was failing? Amazon, Google, right? All the darling stocks, they were getting what? Getting crushed, right? Yeah, like you couldn't make this stuff up, but you could because you know what's going on. Like they just caught a little bit recent, but they were down here getting ready to what? The bottom was going to fall out these stocks. Google was just sitting at $88, guys. I ain't making this up. They were getting ready. The bottom was going to fall out of Google, and Google was going to what? Basic flush and go back down toward this 85 or go down towards 85, 83 down toward $80 a share, and they got saved on the back of really NVIDIA. To be honest, Tesla no different, right? Tesla, y'all know the issue with Tesla. It ain't even a secret at this point, right? They're surviving on a wing and a prayer. They ain't kind of baked in all they what? They future news. They ain't got nothing else. Their last investor day was a wash. I'm sure y'all saw it. That last investor day was so horrible. But the nerds will say, "But this was not about the investors, the raw investors. This was more for the institution money that's looking at our vision for the future, right?" They spoke about the wall packs and all that clean energy stuff. It was kind of way over the investors' head that wanted to pump off of what? The Model 2 news, the Cybertruck news. And hence, that's why they didn't unveil news on the new Model 2. Because he's already got his plate full with the Cybertruck that ain't came to market yet. And so much as you can only pump so much for so long before people is all really coming at you and get exposed. And he already distracted with Twitter, right? He got a new toy with Twitter. He ain't caring about no Tesla right now, right? So these are some of the same things. So we got a gap fill still back down to that 150 in Tesla. Granted, definitely got my eyes on that. So a lot of these companies again on tech sector still treading water, and they're hoping again. I got to say this before I get out of here too. They're hoping that the can that's been kicked down the road to keep the markets up longer than what it needs to be at this point will sustain long enough so they can get to the point of what? Pause in interest rates. Cuts in interest rates. Even though we know when they start cutting rates and interest rates, that's actually a bad thing and not a good thing.
Yes, sir. Yes, sir.
That's when the market gonna bottom out. I mean, we're gonna hit the floor.
So
right.
Go
ahead, Jared, before you get out of here.
I just want to ask you, and I mean, you've been speaking into kind of where my question is. When you say know where we at in the business cycle, we got to be. Well, I'm gonna say this: the market seems to think we're in the contraction mode because we saw how everybody's starting to try to hedge. We saw a little run up on bonds a little bit last week. Then we saw gold break out a retracement level, and then the Dow got rejected. So my question is, do you think we're going to go back to at the minimum bottom of the range the next 3 to 6 months? That's a lot would say it, but
in terms of SPY,
well, I'm saying the Dow is going to lead the way, in my opinion. From what I'm seeing, the SPY is going to follow next.
I would look at it. Yeah, I would look at it from this perspective, right? Because given the Dow situation, right, the Dow was the bellwether, literally from Q3 basically into Q1. It literally carried the market. Industrials, some of the biggest stakeholders in the Dow. Of course, we know 3M, Cat, Deere, right? Matter of fact, Caterpillar was outperforming everything. I don't know if y'all saw it like I did. Caterpillar put the market on his back solidly and rolled from 162 all the way up to 260. That's a lot for a Dow component stock. If you don't believe me, look at the chart. This on the daily. Show me how a Dow had any kind of movement like this in its history to this level of a move in short order time frame besides what? The COVID bounce. Because industrial became important at that point, so to speak. But beside of that, the cat don't move like that. Look at the chart here. It's very tight. It's a very tight range, low beta stock. That's why people having any portfolio, right? It's a safe, right? Safe Dow component industrial, right?
Right.
But it made this kind of move. A lot of this was baked into China reopening, right? They were front running China reopening. That's what made the cat breakout. It brought the Dow up. Deere, all those companies like that, they benefited off that pump, right? Now they're pulling back because now that China's open, is to buy the rumor, sell the what? Sell the news.
Sell the news. In
order for the Dow to, again, reestablish itself again, now we talk about the very use case of the Dow components, how they can be useful in a higher for longer rate environment, that we're dealing with in terms of interest rates, in terms of productivity on the levels that make up a lot of what they do on the industrial side of things, right? Because when you look at the Dow, some of the key components you're looking at in terms of what? Durable goods, manufacturing indexes, right? PMI, right? Those kind of things. ISM, even some on the service side that come off the back of some of the things that, deal with how well some of the product side of the house is doing too. It's mixed, but it's more PMI, durable goods, stuff like that, right? Okay. And a lot of those numbers have been very mixed in terms of what our production level looks like, right? Again, automotive scenarios in that regard too, a little bit. When you talk about these car companies, a little bit, some of the raw materials that comes from that. Aluminum been picking back up recently, right? That's somewhat of a good thing. Copper is the bellwether for the what? For the industrials in a lot of ways, right? Because copper goes into a lot of things, housing, a lot of different things, right? Copper got on the run recently. Finally, it woke up, right? I was looking at copper. I said everything from copper at $3.50. If you break below that and really plummet, copper, the economy is in, or the world is in trouble. If you stabilize around $3.50 in copper and bounce back above that, that's a good little trait to look at in terms of any kind of comeback in terms of the housing sector, or at least the stabilization of it. I don't say a comeback, but a stabilization. But it also feeds into industrials too, because we're talking about, again, copper pipes and many other things, right? That comes along with, what that metal is used for: nickel, aluminum, iron ore. That's base case metals in what? Industrial sector in a lot of ways, right? Building those machines, right? But I would say this again. Go ahead.
No, go ahead and say. I thought you was done. I'm sorry.
No, I'm just saying those are things you want to look at in terms of the Dow component. Again, beyond the base case 3M and some of the other, because even I think Apple in 3M in Dow, and we're talking about small portion of how some of them kind of filter in some of the other indices, but it's just pulling back now. It's grabbing its breath. On the daily, it broke below the 200 recently. That ain't the best news, but it can definitely stabilize. We may get a run on this candle here next, because that's why we hit this candle here and waited. So it may got some more room in it to the downside around 3,600. In this case, not Deere. I'm looking at Deere, but it'll be the same in the Dow because it's gonna look about the same. It's kind of it's neck to neck, right? On the daily on the Dow, it broke a while back around 32,000, right? 800, near 33. Now we're sitting at 31.8, right? Hey, you gotta go ahead.
So you was leading me into my next question, was when you start talking about the copper and the metals and everything, because they was running low a little bit last week.
Yep.
And the next hedge is commodities. So
yep.
I guess my question is,
say no more. Say no more.
Okay, second, third quarter recession is going to be in play. I mean, we've been saying it for the longest, but they say not yet. But
we hear, but it's weird too.
Thank you.
Mm-hmm. Yep, we're here, and we talked about that before you came on. It was like, because we kind of talked about that, around the fall of 2022, right? The few last sessions I did live, like to the fam, we was talking about we should hit recession in terms of them going ahead and calling it out around Q1, Q2 of 2023. We had made that call then around the fall of last year. And I was very emphatic. I said we should already be at around about a 5% interest rate at that point on the Fed funds rate. We're here now, right? They're going to do that quarter basis point Wednesday. Make no mistake about it. They cannot afford to do a pause Wednesday. Why do I know that? Why? Because number one, they just did. Again, they're going to try to bamboozle, people who on the slow button. That last little pump they just did in the market, or this $300 billion that they put back on the balance sheet, that's going to be the excuse, the reason why they can't pause, because they know already that they already know that money going to be inflationary. Go ahead.
Let me ask you this. So think about what you just said. So you took $300 billion of about 50% of the past 9 months' work. When you bailed out your underlings,
balance sheet.
But let's keep it real. Big corporations lost money too. Apple lost about $5 billion. Google lost about $5 or $6 billion. few more corporations out. They didn't go out of business, but what I'm saying is, and then you're gonna come back and then raise the rate because the same thing that caused them to lose, they had unrealized losses too. And what I'm getting at is, if we two billionaires, and then the government come in and give you some money, you don't think I'm gonna feel some type of way, and you still come back and even though I know it's a move in vain, if you come back and you're gonna make the same problem that we all have even worse when you know you shouldn't. You don't think the market's gonna retaliate?
They've been fighting the Fed all the way down.
But that's what I'm saying. This time, if they do that, I'm just saying they're gonna retaliate. You know, you're probably right. We've been talking about it a little bit amongst ourselves, but
they've been fighting the Fed all the way down. You know, so at this point,
because
they got what they wanted. They got what they wanted, but it's not going to be what they really want. Why? Because like we always know, see, you can never please Wall Street. That's the whole game, the business model. You can never please greedy people, right?
But that's greed.
They've been telling the Feds cut rates, lower rate, cut rates, stop, pause, and they've been wrong. Because as soon as the Feds got excited about disinflationary after the last FOMC meeting, he said what? The word inflationary how many times? About 12, 15 times in that press release.
Yes, sir.
That's dog whistling. That's signaling, hey, we're getting close to a pause. Wall Street knows this. They pumped the market off that. Even though we still sitting over 6% in inflation. Small people are still getting crushed under the regressive attack of inflation. Still getting crushed. Okay. And these greedy analysts and fund managers got behind it saying, we close. But guess what? As we know before you came up, we talked about the emperor have no clothes. The banks always going to be the first one to get exposed in this environment. Why? Because they're the ones supposed to be really benefiting in a high interest rate environment. Would you think so? Clearly. They make their money off fees and interest rates being high, right? Lending at a higher fee, they can have better margins. But the thing is that it was such a slow value in terms of how they was able to kind of map money markets to a place where they can get back to being able to charge better fees in terms of housing, because the housing market already hit peak. They came in, I'll say it this way. Let me try to put it in layman terms. At the point where they was able to kind of make a little money in the bank, they was already on the end of the money making cycle because the other parts of the market were already at their peak. The lending in terms of housing was already peaking, so you couldn't make a whole lot of money there. Even though inflation caused car prices to jump up, people still buying, but very small. It was in a small pocket. They had to pay more. Hence, that's why a lot of the car dealers had to raise the prices up a little bit, right? Because they couldn't move inventory easier. And you would think it would get, knock the price down, but they're going to take big losses. Inflation is up. So a lot of these banks couldn't really make a whole lot of money. So they ran to the one thing that they felt like they could still sit in and be comfortable and they thought they can weather the storm of high inflation rates was buying bonds, long-ended paper, right? Turned out that was a bad bet. That was a bad bet. And these so-called sophisticated banks that thought that they were bigger than inflation at 5% terminal rate, or they didn't plan for it at least, even though the signal was there because the Fed kept saying we're going to stay higher for longer. They just kept fighting the Fed. They essentially were fighting the Fed. People who are fighting the Fed getting exposed right now. Just call it for what it is. Banks are. Right? They want higher interest rate, but they were still betting bad in terms of those interest rates going higher. They exposed their own self. That's what you call a boomerang dagger. They got what they wanted and turned out they were what? They were trading naked essentially. So the like you said, the tech sector and basically the financials are the two big main catalysts for the market movement. Right? If one go down, the other one gonna be in trouble. It exposes the other. In some cases, if both of them up, then everything is what is something ain't right in this environment.
Yeah, something ain't right.
Something ain't right.
So, hey, let me ask you one more. I don't want to hog up your time. I know you got to go. So
you good? Yeah, I got a hot second.
We got this big debt payment coming up in June.
Yep.
What, $40-60 billion? How you think that's gonna come into
on
play?
That interest of $31 trillion? Ain't that something? $31 trillion got interest, got debt on it.
Is that gonna break our back right there or what?
They're gonna do like they always do. Never in the history of America to date. It might have been 1 or 2 times in history. I could be wrong. I have to go back and check again. But I think we've always, even when we extended the debt ceiling, they've always came back and raised it. We talked about it earlier before you came on. Basically, we know that it's just the admittance of the Ponzi scheme of American fiat system. They're robbing Peter to pay Paul. They can't pay their debts. Essentially, what you're dealing with now is that if they raise the debt level again, that means that opens up the value of inflation actually even more. right?
1970 all over again.
It's all over again. Why? Because the budgets are getting bigger. Every economic cycle, the budgets are getting bigger. Why are they getting bigger? Because government is overspending. They're not taxing at the rate they should because they're too busy trying to implement policy to fluff up corporate America to make them look good, which they get the kickbacks through the donors. Essentially, it really prices out the little people anyway because the cost of living goes up every year too. Yet there's no qualitative value of life that's being returned back to what? The taxpayers. Better schools, better bridges, better this, better that, better healthcare. It's the hustle that's starting to really crack now. Hence, that's why you're starting to see other major players around the world are saying, the heck with your dollar. We done with it. We got the most expensive thing in the planet in commodities. We don't need your petrodollar any longer. We don't need your gold back dollar. We don't need the currency any longer. We're going to go deal with people who got other commodities. We're going to do business with them, i.e. Saudis, i.e. China, i.e. South America, i.e. Turkey, i.e. everybody is saying we finna run to BRICS now, which we talked about BRICS a while back, right?
Yes, sir.
This new, the players now, they got the commodity in the ground, bro. How you going to fight against that? They and America did such a piss poor job in dealing with Russia. They thought they was going to be able to kind of have their cake and eat it too, and they failed. All to protect a nation that they really didn't have in my opinion, it wasn't worth the equity that we finna lose as a nation. They jumped out the window to protect, they jumped out the window to protect a few people who were obviously were interested in it because they were getting kickbacks. A lot of the people that we talked about already, we ain't got to go through it again. Mitt Romney, his son was working over there. Pelosi's children were working over there. Biden's children working over there. They were funneling all that money through their laundromat money through there, cleaning that money up, taxpayer money, and they was getting kickbacks on the back end. Burisma, all the people, they had interest there. So much so that they gained even the EU to get on board through NATO when they broke that treaty, encroaching on Russia, which this whole issue all about. They turned around and tried to get the UN on board, even though the UN came out literally the year before the war kicked off and told you that Ukraine was the most corrupt country on the planet. The UN said it. And all of a sudden now, it's all good just because they fighting Russia. Make it make sense, bro. So taxpayer dollar flee into that. Go ahead, you about to say something real quick?
No, I just said I can't make it sense. I always appreciate your perspective, good brother. I'm gonna go south.
I appreciate you guys, man. Ubuntu. Again, it just goes to why you guys are already ready to deal with this, right? That's why I say we got a great little family, man. Again, we ain't got to be no more than what we are. We just playing our position and learning as we go. And it's good to be able to have conversations where you can kind of politic with people who are on their wavelength or your like mindset, right? Because it's hard trying to talk to your spouse sometimes when she don't want to hear that or he don't want to hear about it, right? Or your friends or whatever, if they ain't on that same wavelength. It's like, man, like Charlie Brown talking, right, to a teacher. But
hey,
you guys get it.
I don't want to hear it.
Hey, Oba, what if you buy the stock right before the earnings date, right? Do you still get the dividend, or you got to hold on to it until they actually give the dividend?
No, we talked about it a while back. It's been a minute, but they got a thing called ex-dividend day. Ex-dividend day is the date that you have to be in the asset before the dividend basically notice it goes out, right? So if any company that has a dividend inside of an earnings cycle, 9 times out of 10, most times they go ahead and tell you what is the ex-dividend date. Meaning you have to be in the asset before this time frame to be able to partake inside of the dividend, right? So you will have to go to the company and figure out when the next time they're gonna release the dividend. If it's actually inside of an earnings cycle, that'll give you exactly what that date is, because it's actually a date. They'd be like, okay, ex-dividend date is March the 20th, right? Does that mean you have to have bought that shares, through your brokerage on record and settled, meaning you didn't sell it, it's settled on a T+1 or T+2 trading scenario that you own shares in that day, and you can't sell it until that obviously, until that dividend is cut. You can sell some of the share, but you can't relinquish the whole position, right? But that's how that works in terms of ex-dividend. But just go look up their dividend dates. If that was, I think that's what you're asking in terms of, of course, even
no, because I was thinking of so the last one I did it on the old realty, and it gave me back the dividend. So I tried it on ZIM, and I had bought earnings on with those. I mean, I had bought those before the earnings date. I kept it until the day after the earnings date, and then I sold it. But they don't have their ex dividend until April.
No, it don't matter. So that's what I said. If you buying it for because we talked about this a while back how to play the dividend game, right? If you're gonna pay them ex dividend dates, you got to be in then. But most companies got smart; they start doing it inside of an earnings cycle. Especially a lot of time, not all of them, because if they paying it periodically throughout the fiscal calendar anyway, it wouldn't matter. But sometimes through some of their down cycles, that's when they try to up the dividend. Like first quarter is always bad for a lot of companies because that's when they do a lot of the capex spending, kind of revamping to get ready for the summer and the end of the year push. And so they know the stock gonna be kind of underwater anyway. Sometimes they offer bigger dividend during that time, so people try to go in there and trade that stuff. But again, it depends on the company. If they low beta anyway, it wouldn't really matter. But it's still up against market pressure. Again, inflation, everything else we're dealing with. So all you gotta do, if you're doing it from that perspective, if you have any particular company, they'll let you know what their dividend payout dates are.
All right,
They'll let you know what their dividend ex dividend date is. Meaning, this is the date you have to be in the asset to be accounted for that dividend, right? And sometimes, again, they just happen to fall inside of an earnings cycle. But you don't have to. If you get it right after earnings cycle, especially if it was a stock that got beat down, if you catch that ex dividend date going into that, that's a good time to buy the dip in the stock and get a chance to sit in it, ahead of the dividend at a cheaper price. But it's not like there's a whole lot of sophistication behind it. You just have to be on top of the calendar dates. Does that make sense? All you gotta do is they'll tell you what those dates are based on the in their investor relations websites area. They'll have that information periodically set. And sometimes a lot of analysts that cover them stocks, they have that stuff on their websites too, under their coverage of it, right? When they're kind of looking for the dividend to come around or whatever. And so that's just another way that you can angle it or play it, I should say. But just go to their website, it should be all there, that information. Right. So that way you can track it going forward if you're talking about trying to trade around any stock that has a dividend date. Right. So and next time I come on, get a chance, I'll hit it up a little bit more for you, Open Sunny, but show you exactly what you can do. But a lot of this stuff again is already there. So you just look for ex dividend date. Matter of fact, where I'm at on my I'm over here. I'm over here. Okay. I do this real quick and I gotta go. I gotta get up and make a little quick move here. But yeah, it would be more so if you go to let's see, let's go to one of these tabs that's open. Okay, yep. So X X dividend date and record date. So basically, it's like they give you sometimes like a 2 day. That's that 2T+2 I was talking about right there. See, 2 days, X dividend date. They give you the date you got to be in, and it gets recorded and locked in after that settlement of that particular asset being bought. Sometimes it takes about 2 days, given that we're on the T+2. Right, we're about to go to T+1 in a lot of these brokers. I don't know if y'all been seeing that lately, but I'm excited for that. That means your money
See,
a
but
lot
when you
faster.
see it like this, right? Usually, like when it pops up, like even if you're looking at it on Webull, it'll be when it does pop up and say X dividend or X dividend surprise or something like that. It'll be for that same day. And if you buy it that same day, you don't get the dividend.
You have to be recorded by that. When it says the data record, it has to be in for the data record. But
So
in
you
most
basically
cases,
have to hold it until.
at least 3 days. I would say to be safe, 3 days in advance.
But I'm saying they don't give you the exact date on what the dividend date will be.
Meaning the payout or the date you have to be in.
Like how it says right there, the
No,
ex
that's what I'm
dividend
saying.
date.
So
They don't give you
the X
the
date,
exact date. It's like you have to hold on to the stock.
not really. And if you can't get it from there, you have to, because sometimes they may have it maybe different. But if not, all you do is go to the company. Because if they say the X dividend, if they give it to you, like say for instance, they say the X dividend date is on the 6th, as you see on this little diagram right here, right? At that date, at that point, if you bought it and it's closed before market close on the 4th or 4 p.m., you cover. They can't tell you that you're not if it's an X dividend entry date. Now, if they're giving you saying, if they just come out saying like if they drop the news a date after the fact, and they saying okay, X dividend or not even X dividend, it would just say dividend date or dividend date of record, because I don't know what it shows. I have to go back and look at some of the stocks, because I don't use Webull for that. I use it for trading for mine. But nonetheless, if it's showing X dividend date, it has to be within that 2 day window of a settlement, right? Typically, if it just said data record or dividend I don't know how they have it worded. That's why I'm struggling to kind of make
Yeah,
sense.
no, it'll
But
say like what it'll say is, say for instance, Bank of America, because of all of this stuff that's been going on, the banks have been given earning surprises, right? Ex-dividend earning surprises. So Bank of America did one this week. I think Wells Fargo did one this week. A couple other banks did one this week, as far as to keep people invested into their company because of the earning shares, right? But if you buy it that same day when it says that they have that earning surprise, you don't get that earnings, because I've tried that a few times
no.
and
Here's
it
the
don't
deal.
work.
So you saying earnings or you saying dividend? Is it you mean the earnings report? The earnings report
I
when they
mean,
drop the earnings or
dividends. It'll be a dividend surprise. My
that
bad.
matters. You know me, I'm a man of word. You got to be specific when it comes to market because it can throw a person off. So if it says dividend, then yes. Again, chances are it will show up as ex dividend. So for instance, what was the company? Was it? You say
Bank of America. It just did one. A
all right.
few of them did one, but go to Bank of America. They just did one for sure. Because when I think they did it Tuesday or Wednesday.
Right, so and with any company, all you do is come on there and see it's right here. The next payment pays out on the 30th. You had to been in by what? The 1st of March. The ex-dividend date literally is right there. It says the 1st of March. So you had to be in before 4 p.m. on March
So
the
what
1st.
did they pay out on the 30th?
That's what it is.
I mean,
22.67.
not the 30th. A couple of days ago.
I don't. But this is showing the ex-dividend. You might have been looking at. They might have had a special one, but this is their rate, their natural fiscal
So the special one
payout.
and so the special one is different than
Yep.
them just have.
It
Oh,
happens a
okay.
lot. I
Okay.
caught one with Match.com. I remember Match.com did that special dividend. It was like $2 a share. Boy, Joker went to load and they gave the date for it. You had to be at a certain date. But Joker went to load up Match.com to get them just them $2 per share on the stock. That happens a lot.
Yeah,
It
because
does.
EIM they showed that they was giving out $6 and some change per share for the dividend. That's why I had bought a bunch of them.
Yep. A special dividend when you see that it'll kind of pop up in sometimes a earning cycle. Sometimes just the way that they have a lot of money surplus, and they want to give back money to shareholders. And this as you see, it's non-recurring. That it's a one time. It's not like it's all the time. And companies will do that sometimes inside of an earnings cycle to kind of keep their shareholders, again, locked into the stock, right? To keep them from fleeing, especially if they're having distress in the company or even the sector. But yeah, that's how you want to look at this. So always just go check that out on Google to hit them up and see what they got. If they got any special dividends or it's just a regular ex dividend. Now, if it's a specific company that you're looking at, and then you'll be fine, right? So no hustle, no hurt there in that regard. All right. So yeah, so I'll come back. I'll talk about it again next time I come on. Let me get ready to go, guys. I got to get out of real quick. I got a couple things to do real quick. I'm already behind about 30 minutes. But again, a lot of this stuff you guys already know. Just kind of get on Google, man. Hit that Google button and get to searching, man. Don't stress it. Get on there, talk to your brothers and sisters in the groups, whatever, too. Again, turn over that information. A lot of it's already written down, but again, really be useful and resourceful to one another if you can, like you always been doing. Like you guys already got it. Got it. But that's where you can stay on top of the information so you can be solid. All right. So that's it. So let me get out of here, guys, man. It's been an honor. Again, it's my privilege, to come in for you guys, right? As I always say. Good little conversation here again. Been a little minute. Happy to see you guys' faces. Good to hear your voices. Good to see people back in the chat, man. So again, I'm still here. God, ain't nothing happened to me. I'm still getting it in. Still beating the market up where I can. I take my lumps like everybody too. But it's always a great experiment. And I already know, like we've been saying, we've been waiting for this day. We've been saving this bacon. Let the market go through its fluctuation. It's gonna come that point where we're gonna be able to kind of get at it and get all into it. But we got to let the market flush out all this bad money. We got to let the market flush out all this bad paper, right? When that happens, y'all already know what it is, right? And we're gonna go back and test the lows again. We know what's gonna be on the back of. It's gonna be on the back of what? Recession, right? Or that of the value of the rate cut coming prematurely, right? As long as they got inflation, as long as the rate of inflation is higher than the terminal rate of the Feds, we're in trouble. So that's just a quick way to look at it. You're gonna know the market bottom. The market will not bottom until terminal rate actually catches up with what? Inflation rate. Until then, don't buy into the hustle. Don't let them hustle you. You're gonna see stocks like Nvidia pumping, like, oh man, the market back. We good, bro. I'm just gonna say be patient. I'm not gonna tell you what to do with your own money, but I'm just gonna say be patient. You know what sectors to look at for us that has staying power, buying power, pricing power. Those are gonna be companies that got, you know, the ability to weather this storm, recessionary storm, because they offer a use case in their asset that others don't. That's why commodities are waking back up again, right? Even if the dollar's still trying to stay, you know, elevated because the Feds need the dollar up to kill inflation, to bring demand down, you know, kill your pricing power. But at some point, some of the assets that were built for this are going to decouple. That's what you're starting to see a little bit in gold. Gold bottomed out again around about 1860. It was sitting around waiting, you know, to figure out what it's going to do too. It can easily go back down there and test it again. But, you know, right now, if the Fed's going to print money, that's all gold buzz going to do. They're going to sniff out, oh, y'all going to print money? Okay, we really got a reason to get bullish on gold. And that's exactly what Bitcoin doing. Bitcoin said, okay, y'all want to play this game? We're going to show you why we was invented. And it's going to decouple, and then they're going to just get mad at Bitcoin and fight it back through other stuff. But anyway, I'll talk to y'all again next time, man. It's been an honor. My best to y'all. My best to your family. Stay healthy, stay well, stay hungry. Y'all know what the rules are in this game, right? Is that what? Due diligence and dollars, due diligence and discipline equals dollars. That's the name of the game. Never relinquish your ability to put in the research to get what you want from it. And always remember, we rent, release, we do not own. Don't fall in love with none of these stocks and these companies. Don't let these people pump stocks and get you all excited and squirrely, and you jump out the window, right? Play the game like you're supposed to, like a technician, and the fundamentals like you would, been training yourself to become, right? So that way you keep yourself balanced properly anyway, right? So that's it. So that's all I got, guys. See y'all the next time I come on, man. Peace, power, property, everybody. Let everybody know I send my best to them that might have didn't come in. I see you guys next time I come on.
All right. All right, later, Obo.
Peace, everybody. Peace, guys. Peace, guys. My best to you all.
Peace.
Peace.